customers don't even have enough infrastructure themselves to handle the demand, so that's why they come to a company like CoreWeave for that additional demand. That's not going to abate. What I said earlier is we're going to be looking at other customers. They're not going to be adding tens of thousands of customers. This is not a consumer play. So there are going to continue to be very large customers, but we are looking at that diversification. And it does look promising in terms of the partnerships that they've announced in the last few months.
Yeah, interesting. And you also mentioned some of the power contracts as well, because, I mean, this is really where the conversation is starting to shift. I mean, do we indeed have enough energy to power all of this? I mean, you can throw out huge CapEx numbers, but, I mean, if we don't have the infrastructure and the grid to support it, that's going to be obviously the big question moving forward. What has the earnings season taught us so far about what we're likely to hear from a company like CoreWeave, given that even if you clear the bar, your stock can still get punished?
Yeah, I think that we have to think about different fundamentals here. The analogy is something equivalent to building the railways, right? So how were railways built on debt and being able to invest that money and then recouping through long-term contracts? That's the way that CoreWeave is thinking about this. So again, it's going to be much of a long-term play. You know, in the AI era, infrastructure itself is the product, and that is what CoreWeave is selling.
All right, Don Gentile, thank you so much for joining us. Absolute pleasure, and thanks for getting us across CoreWeave today as a bit of a preview to that report card. Analyst in residence, Hyperframe Research. Let's trade it now with Tom White, host of Fast Market. You've got an example trade for CoreWeave this morning, sitting up 1.4% at the moment. Talk us through your approach, Tom.
Yeah, I think if you take a look at this, stocks pulled back so far in the month of November, nearly 20%. So it's been under pressure. They've got, 4 to 6 big customers. That's the concern. But it doesn't feel like CapEx spending has come in at all, and that should benefit CoreWeave. It's off over 40% from those all-time highs that we saw in June of about $187 a share. So maybe the bar a little bit low on this one going into the report. So I looked at a strategy that takes advantage of that near-term higher implied volatility levels, and I looked at a bullish call diagonal, really short-term positioning on this one. I'm going to go out to the November 21st monthly options that expire in 11 days. We're going to buy the 110 strike call, just slightly out of the money to the upside. And then against that, in the near term, November 14th weekly options that expire in just 4 days, we're going to sell the 122 strike call. The option market pricing in about a plus or minus $12 move either way. This kind of sets up with that one standard deviation move. 1 week wide bullish call diagonal, $12 in width. And you're paying roughly about, I've got a $6 debit in here. It's probably trading closer to $5.50 right now. Stocks come in a little bit from the session highs. But the debit you pay is going to be your risk, and you're paying less than half the width of this bullish call diagonal. So that gives you that opportunity. If the stock goes above 112, about the break even, anything above that level is going to be potential profitability on this. I mentioned the debit paid is going to be a risk on it. So if you pay $5.50, $6, it's going to be around $600, $550 per spread that you do. Now, why does it cost less than the width of the bullish call diagonal? Is because of those implied volatility levels that we talk about, the dispersion between them. So in that November 21st monthly option, where I'm buying the 110 strike call, that's about 124% implied volatility on aggregate in that series. And then in the near-term options where you're selling that 122 strike call, that's about 160% implied volatility on aggregate. So that dispersion really lowers the entry point price on this, but you definitely need a move to the upside on it. It's about a 3% gain from the current share price to get above that break even of about $112. So well within that one standard deviation move. It's got a beta of over 2, so it moves more than double on a percentage basis in the S&P 500. And last night the stock fell 60%. But like I said, the bar is low. If you're bullish on this name, this takes advantage of those volatility levels and gives you upside exposure.
All right, we'll be watching CoreWeave out with earnings later on. Thanks so much for the example trade for that name, Tom White. We'll catch you later. Let's just check in where the markets stand right now. Before we let you go, about 9 minutes or so into the trading day, and we have seen up arrows across the board. So we're seeing a little bit of a rebound for stocks, particularly after the bumpy old week we had last week, the Nasdaq coming off the worst week since early April. Sitting up 30 today, 1.5% higher, thanks to some of those Mag 7 names. So we are seeing a nice rally for tech, consumer discretionary, and also communication services, very much doing the heavy lifting on this Monday morning. That's it for us. I'm Sam Bartis. Download the Schwab Network app. Available in the Apple App Store and tune in 24/7 on schwabnetwork.com. Trading 360 with Marley Caden is coming up next. I'll catch you later.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate schwab.com, thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. schwabnetwork.com.
Sam Bartis live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com. We're 90 minutes into the trading day, and welcome to Trading 360. I'm Marley Caden, coming to you live from our Chicago headquarters. Here's what we have in store for you on today's show. In our 360 Spotlight, we're going to speak with the CFO of cybersecurity company Gen Digital, joining us to talk about companies better than expected second quarter earnings. Today's disruptor is Coinbase, as we see shares trading higher after it was upgraded to a buy. George Sillis will join us to break down the call and also have an example trade for us. Then in our 360 round, we'll break down the latest with Instacart after it topped earnings estimates and saw its revenue increase as grocery delivery orders continue to grow. Shares slightly down, though, on the day following that report. We'll break all that down for you shortly. But first, let's check in with the markets on this Monday. The S&P 500 trading up about 0.8% higher, 67.81.97. The Nasdaq trading almost 1.5% higher, 25,417.23. The Dow just above the unchanged line, 47,007, and the Russell 2000 trading about 1/3% higher right now at 2441.69. Let's check in with the 10-year and some of our futures products, see how they're doing. The 10-year holding up higher, about 0.4 higher actually at 412. The dollar at 99.58. Gold back above that 4,000 threshold, 4,090, up 2% so far this morning. Crude oil down about 1/3% at 59.52 a barrel. And Bitcoin trading up 1.25% so far this Monday morning, 105,250, certainly higher than those 100,000 levels we saw lingering around on Friday. Now, I do want to welcome our first guest into the show to talk about one of today's movers. Joining us right now, Kevin Green, our senior markets correspondent here on Schwab Network, to take a look at Tyson Foods after their earnings. KG, can you walk us through the report?
Good morning, Marley. Yeah, we are seeing the shares higher, up over 2% in today's session so far here. And it actually was a better than expected report, both when you're looking at the top line as well as bottom line here. The top line, it actually did miss a little bit here. Revenue actually came in at $13.86 billion. She was looking for $13.97 billion. And the adjusted earnings per share did actually beat the street's expectation, coming in at $1.15. Street was looking for around 83 cents there. You did see around a 25% increase on a year-over-year basis when you're looking at the adjusted earnings per share. Now, if we're breaking down the segments, their chicken segment did see sales increase by 3.8% on a year-over-year basis, and they did see their adjusted margins actually expanding here a tad bit at 10.4%. But the cattle or the beef side of their business, that's where you are seeing a lot of the headwinds, and it has been a problem over the last couple of years here. Sales volume actually dropped by 8.4% on a year-over-year basis, but average prices increased by 17%, so it actually kind of offset their ability to push prices higher, really kind of offset that volume decline here. So sales actually did increase by 4.3% on a year-over-year basis, and processed meats, once again, seeing some pretty decent demand here. The revenue outlook moving forward, better than the street's expectations. They're looking for revenue growth between 2% and 4% in 2026. Street was looking for 2.3%, also re-rating to the upside a little bit when it comes to operating income as well as their capital expenditures. Look, this is a story of a stock that has been seeing a lot of pressure to the downside over the last couple of years, really has not been able to catch a bid, and that is because prices, especially when you're looking at beef prices, continue to rise to the upside. We do have a cattle issue here in the United States because of the lack of drought as well as feed getting a little bit expensive, but they might see some tailwinds if the Trump administration does allow Argentine beef coming into the United States. That should actually increase supply, which would be a positive when it comes to Tyson. Last but not least, President Trump over the weekend blamed some of those meat processors like Tyson, JBS, for causing a lot of the higher prices for consumers here. So that could also be a little bit of a headwind. But overall, this is actually a pretty decent quarter. Once again, stock's up about 2%. Let's see if it's going to be able to maintain these levels.
Yeah, certainly. I mean, and the stock, like you mentioned, under pressure over the last 12 months, has strongly underperformed the rest of the market. But on the heels of the report, up 2.5%. KG, we appreciate you breaking all of that down for us. That's Kevin Green, our senior equities contributor here. Now let's get some insight on the news that's shaping markets. For that, we'll welcome in our next guest. Joining us, Andrew Ahrens, founder and partner of Synergy Advisory Management Group. Andrew, thanks for being with us this morning. Nice to see some green across the board after last week. What are your thoughts about the action we're seeing so far this Monday?
Yeah, we're seeing some nice action today, coming off of a pretty rough, volatile week. I expect the markets to firm up a bit here. We'll see what happens with the government shutdown. And I think the markets are going to do pretty well going into the end of the year. I look at a lot of seasonality that exists in the marketplace. And, we're in the good part of the year, and I'm expecting to see some stock buybacks here. So I'm pretty optimistic about how the market's looking for the remainder of the year here.
All right, so you're optimistic, but we are constantly in this conversation about the potential for an AI bubble, and we've seen this tech volatility and what a massive pullback it can lead to, and also a lot of these stretched valuations. So what's driving that confidence?
Well, the earnings. I mean, earnings are really good right here. Every time we have a major move in the market, we look at valuations and things like that. But I really think that AI is going to be a huge growth driver here. I still think we're in the second or third inning. And I continue to think that the markets are going to do very well.
So we're in the second and third inning. Do we still have a lot more room to run in this AI trade, or is it already priced in?
I think there's a lot more room to run here. I know that, people are looking at it saying valuations are stretched, but actually when you look at earnings, to me, things look pretty cheap, actually. I think we have a long way to go here.
And how much of your optimism and bullish view is tied to the Fed continuing to cut rates?
Well, I mean, that's just another thing. The Fed is going to continue to cut rates, and sometimes the climate looks good for the market, and right now I think that's something that's going to bolster the markets as well.
So pose a hypothetical here. Since Jerome Powell came out and said there is no guarantee about December, despite the fact that the market really thinks it's coming, what happens if we get no cut in December?
Well, then we're going to get a cut early next year. So, they're going to cut rates. I really believe we're going to see that. And, the market right now is looking pretty good. A lot of money flow, I think, is going to go into the market towards the end of the year like it typically does. And I expect the markets to look pretty good.
All right, so with that expectation of looking pretty good, are there any specific companies that you think look good or specific sectors that you're focusing on to the end of the year?
Well, we had a little bit of a pullback here, and I like Meta a lot. It's been one of my favorite stocks. Trading at 28 times earnings. 3.5 billion people are using the apps every day, and stock sold off a little bit here, but I think, it's a good opportunity if you don't own Meta to maybe step in here and maybe own some. I like Uber. That's another one of my favorite stocks. I've been watching Uber all year, too. And Uber's up very nicely this year. I continue to think there's a lot of runway left on Uber. And one stock that hasn't had a great year that I like is Lululemon. I think it sold off quite a bit. It's off 60% off its highs here, and a lot of concern over the tariffs. But I think that going into the holiday season here, I think it could be a really good buy.
All right, so let's first start with Lulu. Like you said, they're down year to date almost 60%. I mean, this stock has been beaten up. Is this just a bargain purchase because you think they now have they've hit their bottom?
Well, I mean, I think some stocks just get overdone, and I think that might be the case here with Lulu. It's a strong name, and I think they're going to do very well over the holiday season. And, I'm banking on, them doing quite well, like I said, and earnings should look good. The opportunity here could be a bargain for shareholders, new shareholders.
All right, and then let's talk about Meta. We saw this pullback after their earnings. This is definitely, you are certainly not the first person to bring up the potential buy the dip on Meta right now. But looking forward with Meta ramping up its spending, its AI spending, how long do you see the trade-off playing out in earnings? Because those higher costs are going to come before payoffs.
That's true here, but their digital ad space is doing extremely well, obviously, and there's so many components of the company. And I think, management knows what they're doing, and I really feel that AI is going to be the next big thing here, and certainly Meta is going to be leading the way.
And Andrew, I know you just closed that you own Meta yourself. So what is your time horizon and your price target for Meta?
Well, I think Meta here can easily move 20% higher. It could be even in the next quarter or 6 months. All the picks I usually lay out, I think, really have the ability to move 20% in a relatively short period of time, in a 6-month time frame. And I think all the stocks I laid out today really could do very well going into the end of the year. And, I think they'd be great additions for people's portfolios.
Well, Andrew, we appreciate you being with us to talk broadly and also for those stock picks as well. That's Andrew Aaron from Synergy Advisory Management Group. And we've got plenty more to come for you today on Trading 360. Next, of course, we've got the big three stocks, 3 charts, and 3 trades. Rick Ducat will take us through the technicals, and Mike Shore will join us to take us through the trades for Oklo, Halozyme Therapeutics, and Visa. That's next on Trading 360 on Schwab Network.
floor in the world? This is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange. The countdown, the setups, the stories that make markets move. Minute-by-minute breakdown of the biggest headlines, earnings, global movers, just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me, too.
Let's move on, shall we?
No can do.
I'll get out here.
Where are you going?
Schwab. Schwab, a modern approach to wealth management.
Welcome back to Trading 360. I'm Marley Caden. It's time for the big three. We've got 3 stocks, 3 charts, and 3 trades. Rick Ducat, our lead market technician, of course, will take us through the charts. Here to take us through the trades is Mike Shore, Director of Trading Education at Prosper Trading Academy. Great to have you both with us as always. Mike, love to start with your thoughts on this market action we're seeing on this Monday morning. A nice, sharp reversal from what we saw last week.
Yeah, I think the market has taken a collective exhale here, obviously tied to the fact that it looks like something is going to get done to get this government up and running again. So the natural reaction is going to be what you're seeing here. And so I don't think it's transformative. I think that everybody knows that at some point this was going to get fixed, but I mean, we are seeing that, that exhale here. And so now we can get back down to the business of actually trading and not having to worry about what's going on in Washington.
Yeah, it feels nice to almost be able to have a sigh of relief here. But first, let's walk through your first pick here for the big three. They've got their earnings coming up. We're talking about Oklo here. Why is this your first one?
Well, I just thought I usually don't put out earnings plays for you, so I was actually I wanted to do one of those. I really like the company, and we're sitting and we're buttoned right up against resistance here with earnings coming out, and if they beat numbers, we got remember not too long ago in mid-ish October we were trading 194 here. Right now we're trading let's just call it 109.
Yeah, it is interesting right now, and today, shares under pressure despite the broader market being up, down about 3.5%. But a really interesting space here, and certainly a company we talk a lot about. So, Rick, as you look at the technicals here, you can see, we saw them see this massive push to the upside alongside a lot of the other nuclear stocks, but a bit more under pressure of late.
Yes, this was kind of the breakout point right here near 84. We had the big surge to the upside. From there, it was pretty much a textbook type of head and shoulders type pattern here with the neckline coming in right around that 110 area. We had a very notable drop below that point during the past 2 sessions here. We have since recovered, but now after the initially higher open, we are once again slipping below that level. So a very interesting setup as we head into this earnings event here. Earnings, as always, could be a major catalyst that could change things. But for now, the prevailing pattern, our uptrend has been broken. Our falling wedge pattern between our 2 white trend lines here is what's in play right now. The breakout point for this case would be around 116, 117 or so based on that pattern. If we were to look at our other studies here, we can see that RSI, our measure of momentum, trending lower below the 50 midline, downward trend line still in play. Pretty common for momentum to trail off as we head into earnings. But in this case, the bearish momentum seemed to be accelerating as we headed into this event here. We are below 2 of our moving averages, yellow 21-day, orange 63-day, at about 127 and 113.50 or so, respectively. If we were to look at our volume profile and standard deviation channel studies, our nearest volume node is about where price got rejected. That is also the site of our linear regression line, our teal line here, our line of best fit. That comes in around 113. So this general area seems like an important point for the bulls to break above. Then the resistance area would be right around here near 140. Our shoulders and our volume node, once again, To the downside, the old highs right here come in at around 84, as we said.
Yeah, we're still pretty decent ways off around that resistance level you highlighted, trading at 108.45 right now. So, Mike, as you look to trade Oklo ahead of their earnings, how would you structure this, especially since you don't usually do an earnings play?
No, I do earnings plays. I just don't do them on this show because, they can be a little bit, they're volatile by nature. But but I'm looking at it that implied volatility is not, in a relative scale, the IVR is not especially high. It's only about 46, which that means that 54% of the time implied volatility would be higher. And so we have relative cheap vol in a stock that can move quite a bit. And so I know that it was highlighted, that 140 strike. That's exactly where I have for the earnings play. It fits with the expected move. So I'm looking for this Friday versus 2 Fridays out. I'm looking at that 140 call calendar, hoping to run into that resistance that was highlighted by Greg. So you can get into that for 190. I think that if things work out in our favor and I have my vols modeled correctly, I think that we can take at least 250 out of this trade.
We've mentioned lately down about more than 25% the last month, but still year to date up more than 400%. So Oklo still has had a really impressive run so far this year. Let's move on to your next one. Also an impressive run, outperforming the market year to date. I'm less familiar with this company though, Halozyme Therapeutics.
Yeah, this just popped up on. So I thought that this would be a good one. We don't have earnings or anything to talk about here. Again, I'm looking at a swing breakout, and this one's even a little bit more clear to find. That if we get over that 50-day moving average, which is sitting right around, let's just call it 70.5, we got a nice run up to at least 80.
All right, so Rick, as we take a look at the technicals for Halozyme, what are they indicating to us? Do you think we can see that run up to at least 80 that Mike was just bringing up? Are we heading in that direction?
Well, that's the old highs. I mean, that's always the kind of the obvious point to keep track of here coming in, more specifically 79.50. This is one of those charts where we had a very big drop-off after our earnings event right here. You can see very clearly where that took place. But as is often the case, the gap wound up getting filled, and then the stock took off and wound up making even higher highs beyond that initial point. Certainly not a guarantee that's going to happen or anything, just a situation that you may want to be on the lookout for when there's a notable gap that happens here. It's a key spot to keep track of, much like the high point as we said earlier. If we were to look at some of our horizontal levels, look at this gap area once again here, our light green line 64, about where we hit some high points around this general area here in terms of our intraday levels, but then more prominently it came back into focus here around the 64 level where we hit a double bottom. From there, we broke out to the upside. Now we're hitting highs recently during last week's session around 70.50. So when we look at our moving averages, we have crossed above the confluence of our yellow 21-day and orange 63-day. Those come together right around 67.50 here, which lines up pretty closely with that series of old highs, so that could be a notable supportive point to keep track of here. RSI also improving. We have crossed above the 50 midline and are on pace for new relative highs. When we do look at our other volume profile study here, we bounced off of this volume node area near 65. The next heavy volume point is up here near 74, so that could be another congestion point to watch out for. We are also quite close to our teal linear regression line, our line of best fit, our idea of fair value, at least according to this study here. That comes in right around 70.
All right, Mike, so as we take a look at Halozyme and we think about how we'd want to trade this one with no earnings event or anything at play here, how would you look at this one?
So I'm looking at that inflection point that we were just talking about. Actually, my price was 70.66. We had talked about 70. Let's not quibble between a few cents here and there, but above 70.66, I'm just going to do a straight vertical. Nothing jumped out on me as far as any sort of inner expiration calendar spread or diagonal or anything like that. So that 75.80 call spread should be trading 90 to 100, 90 cents to $1. So you're getting almost 4 to 1 on that trade on something that has shown that it does have that possibility for that momentum to the upside.
All right, so let's move to this last one. Your final trade here is Visa. Are you bullish or bearish on Visa?
Well, I wanted to be bullish, but really what stuck out to me is that it's range bound. Now it's range bound and trading towards the bottom of its recent range, or the Donchian channel is what I used for that. Trading towards the bottom, yet the IVR, the implied volatility rank percentile, if you want to be exact about it, is only trading 36. So that means 64% of the time implied volatility is higher, and we're not seeing that at recent lows. And so that tells me that there's not a whole lot of people that are afraid to the downside. It's hard for me to say, well, this is, a broken wing butterfly or something like that. But since IVR is so low, I'm going to look at another calendar spread here. November 21st versus 11/28, 350 calendar spread. You can get that for about $1.60 right here. We're basically unchanged on the day. So max reward, the way that I have that modeled out, is nearly $3. So let's just call it, 2 to 1, a little bit less than 2 to 1 on that one.
All right, Rick, so as we take a look at the technicals here, are you showing this range-bound trading sort of right around that area that Mike was just highlighting?
That would certainly be the first word I would think of here. But actually, with the caveat, range-bound to maybe even down, like not range-bound at best, I would say here. The reason I say that is because we also have this downward sloping trend line going across these highs, but we also could pair that with our range activity, 351, general high point here, our green line here, general low point, 335. We did have some intraday excursions beyond that level. Actually, that gives us another extreme low point, 328.70, to watch out for if we do breach this repeated supportive floor that we've established here. But definitely a sideways trajectory here overall. When we do look at our moving averages, that kind of is evidenced in their trajectory here. We can see that mostly just kind of moving sideways for the most part. As the moving averages increasingly are drawn toward one another, that's a sign of either a trend that is so choppy that things aren't really establishing a clear direction, or sideways price activity in which the moving averages just kind of naturally converge toward each other. That seems to be more what's happening in this case here. Nevertheless, our 252-day EMA, our long-term moving average here, comes in at around 330, 340, so very close to that downside boundary that we mentioned earlier as well. So a little emphasis on that once more. We are very close to dropping below our green trend line on the RSI as well for this one. So finally, when we look at our other studies here, volume profile, standard deviation channels, heavy volume here, our point of control comes in near the top of our range, near about 350 or so, 349. We can also see that volume starts to drop off significantly below 340. That's also the site of our -1 standard deviation channel. So by this measure, we've actually dropped below a pretty important supportive area. 335 would be our last line in the sand.
Yeah, we're getting pretty close to that right now, 336.35 for Visa this morning. Mike, we want to thank you for being with us for Big Three and for those picks. And, of course, Rick Ducat, our lead market technician, for breaking down all of the technicals for us. Coming up next, we're going to spotlight the cybersecurity company Gen Digital. We'll be joined by the company's CFO to discuss its latest earnings report and what lies ahead for the company. Trading 360 will be right back.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Morning movers, be the first to find out what's shaping early market action. Tech Check, Options Corner, Futures Focus, Technical Analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Good morning. Good morning.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network. Stay connected to what moves the market. Download the Schwab Network app and stream anytime wherever you are.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Welcome back to Trading 360. I'm Marley Caden, live in our Chicago headquarters. It's time to spotlight the cybersecurity company Gen Digital. Joining us now is Natalie Dursey, the CFO of Gen. Natalie, thank you so much for being with us this morning. If you wouldn't mind just starting by telling our viewers a bit about your company.
Yeah, thank you. So we're a cybersecurity company that's broadening out to being everything under the cyber safety umbrella that internet, folks engaging in the internet need to be aware of. The ever-changing cyber threats are growing and expanding and at a rapid pace, and our company offers many, many solutions to help protect you and your family and your loved ones while they engage in the internet.
And Natalie, I know your company put out your earnings last week. Can you just walk us through some of the highlights?
Yeah, so we beat our expectations. We beat expectations on both the top line and the bottom line. Our company has been really ever-changing in terms of as we expand and we drive additional growth. We also just did an acquisition of MoneyLion, and so we've just branched out into the financial wellness sector a couple of quarters ago. And with that, we are now really growing very, very strong, both on the top line and delivering 12 to 15% EPS growth on the bottom line.
All right, so let's talk earnings first before we get to your acquisitions and this move here, the pivoting of the business. You posted your 25% revenue growth. You raised your full year guidance. The street likes it. You're still up more than 1% today. I know that acquisition will come into play in the future, but what do you see as the key drivers that allowed you to exceed those expectations for this quarter?
Oh, it's the team inside the company in terms of just executing. We have a very, very clear roadmap. We have a clear plan. We inspect what we expect on in the internal execution of the company. And the team is just very, very excited to just continuously drive their areas of the business. And then those building blocks come together very nicely for us to deliver these types of results.
And you've got 8 straight quarters of EPS growth that's at or above, I think, 12 to 15%. That's a pretty strong execution streak. Do you have any concerns about headwinds or risks as you head into fiscal year 27?
Yeah, so of course, we're looking at the economy and the ever-changing dynamics of that, just like every other company. But what we see is that, even though we're a consumer-driven company, these are our products and solutions are needs if you want to live an ever-changing, ever-expanding digital life. And so our consumers understand that. We try to be very, very cut through in terms of our messaging as we bring our solutions to market, we focus a lot and we invest a lot in innovation to make sure that we are delivering on our commitments to our consumers to protect them. And then, in the event that there is something that happens to you, especially if you have the identity solutions of our solution, we are there for all the restoration needs that you have. And so it's just about making sure that our customers understand what we offer, that we stay competitive on price, that our messaging is cut through, and that we deliver on our commitments to our consumers.
And I also want to ask about your cash flow. We've had so many conversations in every earnings about capital allocations and CapEx spending. Your cash flow up 24% year to date in this most recent earnings report. How do you plan to deploy that, and how should your investors or potential investors think about your capital allocation from here?
Yes, we are very, very strong free cash flow generators. Very proud of that. And so we have three capital allocation tenets. So we keep a commitment to our dividend. We spend about $75 to $80 million a quarter on our dividend. And then the rest of it goes to deploying opportunistic share buyback. We have about a $3 billion share buyback authorization, largely left remaining. And then we are also focused on a healthy net leverage ratio. So we're a little bit over 3 times net right now, with a commitment over the long term to stay around 3 times net.
All right, now I want to pivot to this secure financial wellness narrative beyond your core cyber and identity business. How substantial is that business today, and when do you see it meaningfully starting to contribute to growth and margin?
Yeah, the Moneyline business, it was very, very healthy. It's very special. It's growing exponentially and at a very, very healthy margin. And we've fully integrated the business very quickly. When we do acquisitions, this is now our 5th acquisition in the last 5 years, and we integrate really, really quickly. It's healthy for the teams, the structure, the operation, and so we
the boys are trying to come in.
So as we move forward, it is as one holistic unit in terms of we created 2 segments within our business in the last couple quarters. Moneyline is very embedded in our trust-based solutions, and so we'll leverage the Moneyline engine, their inventory, their products, and really connect it into and start offering personalized solutions for our entire base of 77 million paid customers that we've got.
And Natalie, now that you've entered another competitive space in financial wellness alongside cybersecurity and identity protection, in addition to making these acquisitions, what is Gen doing to differentiate itself and stay ahead of its peers in the space?
It's all about innovation. You've got to make sure that your solutions and your products are very, very competitive. Again, those cyber threats are ever changing and at a record, very, very fast pace. And so we pride ourselves on bringing amazing solutions, reliable solutions to our customer base. And then it's also, how you talk to your customers, how you serve your customers. And so we're really trying to focus on making sure that we've got our resources behind diversity in our marketing channels. You've got to make sure that you invest in your brands. We have world recognized strong brands in our portfolio, but it's also about how you put the performance marketing dollars in play and market so that you meet the customers and your future customers where they're making those critical decisions.
And now let's talk about those future customers. So in, let's say, 3 to 5 years, what do you see the business model at Gen looking like? What percentage of it is now in this financial wellness category versus your legacy cybersecurity and identity business?
Yeah, I appreciate the question, but the way we look at it is just much more of a blended portfolio of products and solutions where, yes, we've got customer cohorts, everything from security to privacy to identity now, and as we've acquired Moneyline, they obviously have their own set of customers. But as we look forward from a strategic vision perspective, it is holistic, complete cyber safety protection for all users that are engaging in the internet. Now, different milestones that you run into your life, different stages of your life, as you either protect yourself or you move into protecting your family, the protection that you need as humans engaging with this ever-changing space is holistic, and we're going to take that approach on a go-forward basis. The real future challenge for us, which we're very excited about, is being much more dynamic, much more personalized in the moment, leveraging AI technology to be more on the forefront and very predictive and personalized in the offers that we're able to provide you.
Natalie, we appreciate you being with us to talk to us about Gen Digital and also walk us through the earnings for your company. That's Natalie Dursey, the CFO at Gen. And coming up next, we're going to have our disruptors. We're taking a look at Coinbase after it was upgraded to buy. Stuart Silas will walk us through the call and then give us an example trade next on Trading 360. Stay with us.
Connected to the markets with Schwab Network. Tune in 24 hours a day, 7 days a week on SchwabNetwork.com
and on all your favorite streaming services. Schwab Network,
available anytime, anywhere, on any device for free.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
We got consolidation right here by this one. By sport.
Welcome back to Trading 360. I'm Marley Caden here in our Chicago headquarters. Let's head out to the New York Stock Exchange for a check on the markets and welcome in Nicole Petalides, host of Opening Bell and the Watch List here on Schwab Network. Good morning to you, Nicole. We're about 2 hours into the trading day. What's standing out for you so far this morning?
The up arrows, we'll take them. I mean, for the big picture here, I mean, you woke up this morning and you saw that the government shut down.
I'm looking for a balance right here on the SPY. On the entire market.
After the selling that we saw last week. Now we're going back and forth. As a matter of fact, the VIX is at 1846.
Ooh, okay.
Might
check one, two. Might check
moved
one,
a bit into the red. The S&P's holding on, though, but had been up over 1%. And so people were stepping in and they were buying different areas,
that's a bit better.
Including
how's everybody doing?
The bright spot. The fact that the government shutdown is coming to an end, most likely day 41, that's a big deal. You still see over 3,000 delays today. Yesterday, we had, cancellations across the board. So after the NASDAQ had its worst week last week since April, people probably felt a sense of relief today to see some up arrows and some good news for Taiwan Semi and NVIDIA, for example. We do have a slew of earnings that we're watching: CoreWeave, Cisco, Disney, On, AMAT, Oklo, just to name a few, Oxy, that are all coming up. So we have a lot of story stocks there. We have a big deal that we're going to talk about, too, in a moment when it comes to Pfizer. Tesla's making news, but the big picture here is that people are still betting on the seasonality of November, December, January, and still feeling more optimistic rather than pessimistic.
Yeah, we just had Andrew Aarons on a few moments ago, and he said the same thing. The seasonality of the markets is absolutely bullish right now. But right now, let's talk about healthcare and this Pfizer deal. But insurers under some major pressure today following President Trump's comments on Truth Social over the weekend. But we are finally getting some resolution in this Pfizer, Metsera, Novo Nordisk acquisition drama that we've been talking about for the last couple weeks.
Well, it was no secret that Pfizer was missing that piece of the pie while some of the other drug
drug makers were doing so well in the weight loss trend. And now with this acquisition here, this deal, it's nearly $10 billion. This started back in September when Pfizer moved forward with a deal of $7.3 billion, and then Novo, this is for Metsera, and then Novo steps in with a $9 billion deal. And you did have Pfizer try to raise some flags, but was denied by the court, saying, look, this can go forward. And then a bidding war sort of started, and then now Pfizer comes in with a $10 billion deal, and Novo pulls back, saying, well, you know, we're going to exercise some financial discipline. But the idea here is that this is something that Pfizer really needed. It's oral and injectable drugs, potentially the best in class when it comes to efficacy and also safety. It is an area that Pfizer, you know, they've been talking about COVID and all this. They just haven't really had as much in the weight loss area. And of course, with over 200 different kinds of health conditions connected to obesity, this is something that continues to be something very important. And Metsera has already been a winner. It's up over 165% in 1 year. I know it's pulled back a little bit today, but it has been an incredible stock. So this will advance the portfolio of Pfizer in the world of obesity drugs. I mean, the healthcare stocks came under pressure with President's comments, but I did see that they bounced back early this morning. We'll have to take a look at those in a bit. In the meantime, this Pfizer deal is the big one, and Albert Bourla just saying what a great deal it really is and gives them advanced portfolios in the world of obesity.
Yeah, certainly will give them some much-needed competitive edge in that space they've been lagging in. But like you mentioned, you know, Metsera performing up 176% in the last 12 months, but today down about 15%, Pfizer down about 2%. Nicole, I thank you for being with us to walk us through that story. That's Nicole Petalides. Now it's time for the disruptors. George Stillis, our senior markets correspondent, joining us with today's company, Coinbase. Shares are higher after Maness Crespi upgraded the shares to a buy. You know, George, what's behind this call?
Well, I think there's a few things going on. I mean, if you look at Coinbase, it's higher this year by about 24%, but it's been down since July. It actually is corresponding quite closely or correlated quite closely with Bitcoin, which has also been trending slightly to the downside since July. But nonetheless, if you just look at what's been going on with Coinbase, and even last time they reported earnings for last quarter, sales are still higher by 44%, but there are some challenges with earnings as the company is really investing quite heavily in technology, but also, you know, trying to gain market share and gain customer access to institutional flows, but also to stablecoin, which is another avenue in which Coinbase is trying to lock in customers. But nonetheless, if you look at Manessa's call, as you mentioned, $375 target, which is actually right below the midpoint consensus of $385. They're actually pushing their earnings estimates for 2026 slightly higher, and they also are saying that the company is expected to earn pretty much in line with $8.06 this fiscal year. And the reason is they're actually looking at Catalyst, which is more regulatory framework, which is favorable for stablecoins, and growing market share from an institutional standpoint for Coinbase. And they're also looking at the favorable technical conditions, looking at it potentially as a buy-the-dip opportunity, considering looking at Bitcoin, which dropped to around 99,000 last week, seems to be placing itself on a level of support going back to earlier this year.
Yeah, we're seeing coin, sort of tied to this Bitcoin move down about a little more than 11% just over the last month. But on today, they're trading up almost 2%. They announced this morning they're launching a new platform that will allow its individual investors to buy tokens before they're listed on the cryptocurrency exchange. So shares went up, about 5% in pre-market trading, now still up close to 2%. With that said, George, and this upside call at 19% upside from where they're trading right now, how would you structure an example trade?
Sure. So again, if you look at crypto or Bitcoin as a proxy, Coinbase seems to be following that narrative. And this may be an opportunity for those who are looking to buy the dip. You can certainly do that. Again, as Coinbase is correlated with crypto. But you can also see that, going back to last week or last Friday, many stocks actually traded near their 50 or 200-day moving averages. Coinbase was actually in that camp of the 200-day moving average. So what I'm going to do is I'm going to sell a put vertical below the 200-day moving average, or with that in mind, considering potentially a reversal and a trend continuation back to the upside. So I'm going to sell in December with 39-day expiration. I'm going to sell the 290 put, and then I'm going to buy the 280 put below that. So altogether, this sold for a credit of about $2.50 a share, or $250 a contract. So in essence, the whole premise behind the trade is it's bullish and neutral. 290 or higher is the sweet spot between now and expiration. You got to keep that premium because it'll roll to zero. 287.50 is your break even, and you're in the 250, but your risk is 750, and that only occurs if the stock hits 280 or lower by expiration. So it's essentially a trade that allows flexibility in case there's a sideways drift in the stock. It's not necessarily buying an aggressive call option. You can certainly do that if you're more aggressive, but it's still a bullish trade. You have to be mindful of the risk and the return.
All right, right now trading at 315.42 for Coinbase. George, we appreciate you being with us for Disruptors Today, breaking down Coinbase at his call, and also your example trade at George Phillips. Coming up next, it's our 360 round. We're going to break down Instacart's latest report and how consumer pressure is impacting the delivery space. That's next on Trading 360.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
I'm Alex Coffey. And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make-or-break level for this stock.
And that could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on the Schwab Network. Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me. And my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren planning for their college education. Someday it'll be their turn.
This is Fast Market, built for traders who want more than just headlines.
We walk you through trade ideas with structure, risk management, and a focus on execution.
From options to earnings to volatility plays, we bring decades of trading experience to every sector.
With real-time insight across products and sectors, we deliver what active traders need to stay ahead. Fast Market weekdays at noon Eastern, live on Schwab Network at schwabnetwork.com. Welcome back to Trading 360. I'm Marlene Caden. It's time now for the 360 round. For that, let's bring in our next guest to discuss Instacart's earnings. Joining us, Scott Devitt, the Managing Director, Equity Research at Wedbush Securities. Scott, thanks for being with us. Now, I know you have an underperform rating, and your price target is just a touch under where they're trading right now. You know, walk us through your thoughts on the report and why you're maintaining the underperform rating.
Good morning, Marley. The report itself was decent, moderately ahead of expectations. The challenge that we have with Instacart longer term, I mean, it's a good service, it's a well-run company, but it's in a category that had less competition when Instacart came into the public markets than it does today, and most notably, the entrance of Amazon basically integrating perishable items into the Prime service and really blowing that out the last few months and then through the end of this year. We think it's going to change the competitive dynamic in 2026, and that's why we have the underweight rating on it.
Before we jump into some of the competitors, they top expectations, but they have some, what I'm seeing, sort of modest guidance from management. How do investors interpret that? Is that highlighting what you were just mentioning, that this increasing competition is going to create some problems for them?
I think every guidance is unique, right, to the circumstances, and in this case, I think it's less about conservatism and more about the reality of the situation. I mean, a few things that have happened also with Instacart in the past 12 months has been it lowered the threshold for those that subscribe to Instacart Plus to $10 to get free shipping, so that's less economically favorable for Instacart, but it did drive order volume. That's why order volume quarter was quite strong. That comps out in the fourth quarter, and then to offset that, they also stopped discounting service fees in the Instacart Plus as well to kind of make up for some of that lost economics of the $10 minimum, and that comps out in the first quarter. So you're going to have some degradation, just natural degradation in growth rates because of those two items effectively comping out, and we think this business is probably going to be growing in the upper single digits in 2026.
Okay, so with that and then the increased competitor from these other grocers,
I'm trying to see if we can get some type of balance from the pullback from
buy online,
this morning.
pick up in store play being from big retailers affecting Instacart's delivery model.
So with Instacart partners, you can do that as well. But effectively, you're talking about Walmart and Target, and particularly Walmart has been very successful with the buy online and pick up at the store. That's I think one segment of the market. Some consumers like the product to come to the home. Some consumers, many, still like to grocery shop in the store. And so I think that that picking up at the store has taken a segment of the market, and one that again Instacart's partners do participate in, but may not have the scale that Walmart does in terms of how many shoppers.
All right, if we don't get a balance right here, we're gonna go lower.
And then secondly, Walmart and Amazon and Uber and DoorDash are all becoming a lot more focused on delivering product straight to the home, which is kind of Instacart's sweet spot. And that kind of increase in competition is probably the biggest factor here, that's going to affect the growth rate of the business.
And you just mentioned DoorDash and Uber Eats. Now Instacart has restaurant orders a part of their mix. Do you see them quietly becoming competitors to them, or is this just a complementary growth area?
It's complementary. There's customers there, and a lot of that inventory is coming through a partnership with Uber Eats. So Instacart will get some share of that market, but Uber Eats and DoorDash does a very good job of serving it, and they also have their own loyalty programs. And so I anticipate the restaurant delivery business will continue to be dominated by Uber and DoorDash, and Instacart will get a small piece of that market.
And if we do in fact start to see their core grocery deliveries start to slow down, as you suspect they may from increased competition, what other adjacencies do you think could pick up the slack for Instacart?
So they talk about being a technology enabler, so not just a marketplace, but providing technology for the grocers to improve their own capabilities as well in terms of managing websites, if the grocer wants to do their own delivery and things of that nature. And so I think the technology infrastructure tools is an area that enterprise component of the business is an area that the company talks quite a bit about. It also has an advertising business that's about 30% of the total revenue, and they do anticipate or aspire to have that business grow faster than the overall revenue, even though it's not doing so today.
And I also saw in several notes analysts citing GLP-1s as a potential headwind to grocery volumes. How much of a concern do you see those as for a business?
Hey, thank you.
I don't find them at the center of that controversy, but I mean, so I think there's probably companies that are affected before Instacart is. I mean, Instacart is a staple in terms of consumers buying groceries from them, and so I don't anticipate when you build the matrix of where the impact would begin from GLP-1s, I wouldn't put Instacart at the top, but anyone in the food industry has to pay attention to it for sure.
And Scott, what sort of commentary or catalyst would you need to see from Maplebear and Instacart for you to change your rating from underperform?
An acceleration in the business, so diffusing.
We need more bulls, so they're gonna pull this back.
Around competition, and the only way to really do that is to see the top line accelerate next year. And if that happens, then with Amazon at that point having entered all markets that they're going to complete by the end of 2025, then one could argue that Maplebear made it through, and so that's what we'll watch for.
Scott, we appreciate you being with us to break down Instacart's earnings and walk us through your thesis on your underperform rating. That's Scott Devitt from Wedbush Securities. And Maplecourt, the owner of Instacart, is trading up more than 1% so far this morning. Also want to thank all of you for joining us today on Trading 360. I'm Marley Caden. You can download the free Schwab Network app available in the Apple App Store. You can also tune in 24/7 on SchwabNetwork.com. I'll be back later today with Market on Close.
All right, Bulls are still here.
But stay with us. Fast Market with John King Hall is coming up next.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning
Alright,
at
look
its
like a
finest.
breakout's coming.
Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, data-free traders, and trusted financial journalists streaming live and on demand.
Schwab Network.
Good morning. I'm trying to see how far this breakout can be.
SchwabNetwork.com.
Meta leaps look good, especially if we get a breakout right here.
I'm Sam Bonnet, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com. Welcome to Fast Market here on Schwab Network. I'm Diana King Hall. Coming up on noon Eastern here at the New York Stock Exchange, the Bulls working on their comeback with the shopping list out today. We're off the
Boom, boom, boom.
but you still got gains on the board. Let me take you through the levels right now as we hit lunch hour. The S&P 500 has a gain of 0.8%. At the top of the leaderboard is communication services, followed by information technology and consumer discretionary. You'll recall we saw weakness in those sectors last week, but you have more segments of the S&P 500 on the plus side than on the downside. You do have some pressure on consumer staples, followed by utilities. The Dow has a gain, better by a little bit more than 0.1%. We'll see if the Bulls manage to hold on to that and defend some of the gains that we saw earlier in the session. The NASDAQ 100 still developing the ball today, up nearly 1.5%. Russell 2000 up by 0.75%. Here's the roadmap for today's show. We'll look at example option strategies for CoreWeave. It's got earnings due after the bell today. Plus, the The team from Lightfolio will be along with sensitive data on Chipotle, which has had an incredibly challenging year. And in the world of supercomputing, Rigetti has his quarterly report card due after the close. Now that we've got the roadmap for today's trading action, time to bring in my co-host and trading veterans. We've got Tom White in our Chicago studio and Kevin Hinks joining us live from the SIBO. We've got you covered from exchange to exchange and beyond. All right, stocks do have some firepower today, guys. The odds are increasing that the longest government shutdown in U.S. history is nearing an end, finally. Tom, what's your take overall?
Yeah, longest in history, and it put pressure on stocks to kick off November. I've seen this weird bifurcation where we typically see a lot of volatility in September and October. That didn't take place. You know, stocks rose to all-time highs, and then, you know, the government shutdown, while it was ignored for the first basically month of it, it really started to impact equity markets here over the last week. Yeah, the NASDAQ down 3%, but you're seeing that nice jump today. Based on the fact that they might get a deal signed sometime this week, and it has to go through the Senate, then it goes through a House vote. Mike Johnson just came out with some commentary that they're going to try to get the vote done by Wednesday if it passes the Senate. So that's good news for equities that had been under pressure. Now you kind of realize that we're just a couple percent off of those all-time highs that we've recently hit. So maybe that pullback warranted a little bit. We've got high, elevated valuations at this point. Earnings have held up pretty well for the most part, and that's kind of led to that optimism in the overall equity market. But I would expect that we're probably going to see some more additional volatility. Now, we all know that November is typically one of the strongest months out of the year, but then we didn't see the volatility in September and October, which are typically, some of the worst months out of the year. So do we flip-flop that now? That's maybe what investors are thinking about. You look at the Dow is relatively flat today. S&P and NASDAQ both off of their session highs. So maybe some profit taking. But yeah, this is good news for the equity market, that's for sure.
Yeah, it certainly seems to be that way, that it's good news for the equity markets. And Kev, you remember we talked about this last week, I said 40 days and 40 nights. We're at that marker here as, the progress continues. It looks like, we're finally making that progress.
Everything is bullish right now.
Couldn't ignore it forever in terms of the market. You got this sigh of relief. What's your take, Kev?
Yeah, from a trading perspective, let's face it, this recovery, this rally started about noon Eastern time on Friday, when this market went from 66.31 to basically rallied almost 100 points by the end of the day Friday. It's going today like I thought it would go. A gap opening, a little bit of softness after the gap opening off the highs, now starting to firm up for the second half of the day. So, there's just not a lot to get in the way of this market right now. We've got NVIDIA's earnings coming up on the 19th. I think core we get after the bell. After the bell will be a significant one for the AI sector. But I think this relieves a lot of uncertainty in the market, and that's what the market was suffering from, just pure uncertainty. And so once that dissipates, and it's beginning to, I think you're going to see a much firmer market for the next few weeks here, Diane.
Speaking of affirming, remember that song, Return of the Mac? Today is Return of the Tech trade, powering up today, Tom. We've been watching names, like Western Digital rise. You got Palantir making a comeback today, Micron, AMD, Seagate, you name it. Some of this is around some analyst activity. Tom, what's your take?
I think if you take a look at it, Palantir is still down nearly 5% so far this month in the first 6 days of trading. So that's given up some of those gains, even though they had a pretty good earnings report. You've got NVIDIA still down.
Amazon leaps look good.
Over 3% so far in the first 6 days of trading in November. Microsoft had 8 straight days to the downside before, ticking higher today. So maybe a little bit of a rotation trade that's been taking place, but you're starting to see tech kind of lead again. Some of the commentary that was out today on the 5 critical minerals that China's going to allow to start to get exported again. That's a bonus for these companies, especially the semiconductor names. But you mentioned like Micron, Seagate, Western Digital. Those things have just been on a parabolic move to the upside based on the amount of memory that's going to be needed in this AI infrastructure build-out. But I don't know if we're completely out of the woods on tech because some of these names have really elevated valuations, but the CapEx spend is still there. AI infrastructure is built out. Dan Ives was making some commentary that, we're in, the third, fourth inning still in the AI infrastructure build-out, and tech's going to continue to lead to the upside here into the end of the year at least. We've got NVIDIA earnings in about a week and a half. That's going to be the next big catalyst for this segment. But having a nice day today on the risk-on sentiment. But there's still about 4 or 5 of the S&P 500 sectors that are actually negative today. That's why you're seeing it weight on the Dow a little bit. But we are gaining some strength right here.
Okay, yeah, I'm glad you mentioned Sandisk. That stock rallying more than 10% right now. Western Digital up more than 6%. Seagate's got a solid gain here, too. Again, part of this around some analyst activity becoming more bullish on these names. For Sandisk, Barclays, you got them raising their price target to 220 from 39. They are still equal weight on this, so
All right,
they're not
let's see.
completely off the sidelines.
It might be some profit taker right here at this area, at this
around
resistance.
these names. Kev, what's your take?
Looking at the entire market and what's happened today, Tom's right. Not all 11 sectors are up in this market, but if you focus on 3 main sectors, that is information technology, communication services, and consumer discretionary. If you focus on those 3, and all those 3 are up more than 1% today, market's not going down with those 3 stronger. Just like the weakness has been in those 3 sectors for the last couple week or so, if they're all strong, which they are today, boy, the market's going to have a tough time going down because they take up such a big percentage of that S&P 500 map. So, yeah, if you're looking for 3 things to watch among 11 sectors of the S&P 500, watch those 3. That'll give you a pretty good idea what the market's doing day to day. Today, all up over 1%.
Okay.
Okay, great point. And as we look across the heat map, certainly watching NVIDIA, which you can't talk to tech trade without a nod there. Kevin, you mentioned that earlier. NVIDIA up more than 4% right now. You got UBS out with some commentary saying they expect NVIDIA to exceed fiscal Q3 outlook. They talk about the sustained momentum. You had Jensen Huang saying they need more chip supply. So, it doesn't seem like the demand is the issue. Tom, what's your take?
Yeah, Jensen Huang was visiting Taiwan. He basically told them, hey, you need to increase production by about 50%. I mean, that's pretty spectacular. But you look at, the demand side for their high-end AI chips. It's basically 10 spot on demand, and then you've got them releasing about one, right? So it's a 10 to 1 miscalculation at this point, the number of chips needed versus the number of chips that are getting out there at this time. So that kind of fits into that narrative of the demand out there that's continuing for the Blackwell, and soon it'll be, their new iteration of a chip into 2026. So the demand's still out there. Citigroup raised the price target to 220 from 210 today also, so you had some positive commentary there. The stock's still down so far in the month of November, but I think if you take a look at the demand that's still out there for these high-end chips and the CapEx spend from some of these hyperscalers, that's not going down, and it hasn't gone down. And I've kind of been pounding the table on that. Until we start seeing these companies start to pull back on spending, maybe this AI trade is in the early innings of what a lot of people are anticipating.
Yeah, it's true. There's been this question we've been hearing from different people. One, what AI inning are we in? Are we in a bubble, or where are we in the bubble? Goldman put out some analysis today, and kind of dividing the line between the dot-com days and AI today. They think things are, yes, piping hot, but not meltdown mode. Kev, what's your take when you think about NVIDIA in this context?
Yeah, how many times on this show over the years have we talked about, suppliers cutting back on supply? It's always a big story, right? Apple suppliers cutting back. Suppliers, we seems like once a quarter. Well, here's the exact opposite of that story. How often do you hear someone like Jensen Huang, the size of that company, going to a company the size of Taiwan Semi and going, we need 50% more chips? And the CEO of Taiwan Semi confirmed that he had asked for that. So, you know, every time we try to guess what inning of a game we're in when it comes to AI,
Dog wants to go higher.
we all may have to come to the conclusion that it's top of the first and the leadoff hitter's up. It's very early, you know, so we may have to keep adjusting our innings to the downside here, as it just seems we're just starting to get going here. So, it's interesting to watch this play out, but when someone at this stage of the game goes to Taiwan Semi and says, I need 50% more, what does that say about what inning we're in? Lower, I think, is the answer, Diane.
Okay, yeah, it's true. I wish it was like sports where it's like a clear, you know what inning you're in because you know the time. Even when there's timeouts, you know the time.
Nice
when
rejection.
Yeah, exactly. We need a scoreboard. All right, let's talk rare earths. Tom, you brought this up earlier, so there's been progress on that front. China officially suspending export controls on the critical minerals needed for manufacturing the semiconductors. You take it beyond that, things in the defense space as well. I'm looking at MP Materials rally today as well. You got Deutsche Bank upgrading that. Tom, when you look across the sector, what's your viewpoint?
Well, I think it's it's being reflected in the stocks today that use these critical minerals. I mean, they're releasing those export controls on 5 of them, and those are what whether it's Micron, whether it's AMD, Intel, and other producers of these chips need, right? And so the tech sector booming on that news. You mentioned MP Materials. It's going to be one of those things that the need for these critical minerals is going to continue to expand probably over the next several years. They're domestically trying to improve what we produce here in the U.S., pulling back on some of the federal regulations, which is a bonus for companies like MP Materials and others. And then you're starting to get new deals signed with not only the domestic production here, but other countries. Some of those trade deals that we've announced with them have included rare earths, and that's going to be a benefit where we can kind of get off of that wagon that we're on right now, where China's basically supplying about 70% of these globally, and that'll be a bonus cost-wise.
I'm looking for a retest somewhere in the bounce. I still believe the market might go toward all-time high.
Produce that tech starting to ramp up today, not surprising with that news.
Okay, yeah. Kevin, we went into today having a conversation about, like, is today going to be an everything rally? It doesn't seem to be completely the case given how we started. But at the same time, no surprise, as Tom said, to see some of the momentum here in the rare earths. What's your take?
Yeah, well, first thing, judge the day but when the day's over, because I think this is playing out pretty normally. Big gap opening, those are always going to be faded and softened right after the bell, like we saw it at that second hour. But people are going to be setting themselves up for tomorrow and the rest of the week trading, and I'm going to watch the final hour of trading today. I think it's going to be very important. Now, this rare earth thing, very good news for the U.S. Basically a 1-year suspension of the export controls. Now, if the United States is smart, and I'm going to assume we are, we're doing everything in that year to try to get our own supplies, so we are not relying on China, because this dependence that they can manipulate and negotiate is never going to go away unless we become independent in these rare earths. And I know that there's companies out there doing that. Scott Bessent was on the air the other day doing an interview saying this is a magnet, a rare earth magnet produced in the U.S. It was one of the first ones. So the key is, in the next 12 months, to make it so we're not dependent on China for these rare earths. Because every day we are, that's another negotiating chip they have against us. So, yeah, I think this is really good news, but the long-term plan should be to be self-sufficient in rare earths.
Well, you can see certainly why MP Materials rallying today. So far in terms of the scale, it's the only one here in the U.S. that operates in that scale. I always feel like when we have this conversation about rare earths, it reminds me of like a superhero movie. I think about like the Vibranium and Black Panther. I don't mean to, I know it's not the same thing, obviously, but it makes me think of that. It's like a precious
conferences, future educated, and so much more. Plus, PayRent was built unlocks access to
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smart with Schwab.
Welcome back to Fast Market on Schwab Network. It has been one of the highest flying names in the AI trade this year. Recent month has been bumpy though for 4 weeks. The AI infrastructure name set to report results after the bell today. Here's the setup. Analysts are expecting the company to report a loss of 39 cents per share on revenue of a touch above $1.25 billion. 4 weeks has quickly become known for landing deals with AI heavyweights like NVIDIA, Microsoft, and OpenAI. But investors will want to know what its vision is from here. Speaking of vision, let's throw on the trading glasses and welcome back in our co-hosts Tom White and Kevin Hayes. It is bull versus bear time. So before we get to your example trades, we got to talk your thoughts all 4 weeks. The shares have been higher today than results. Kevin, I'll start with you. What's your thought?
I'll give you the game plan in 2 words, Diane. Aggressive expansion is what they're trying to do. And this stock down about 29.5% off its recent highs. And they are just, here's the numbers, Diane. Think about this. In terms of revenue backlog, second quarter, 30.1 billion.
Oh, boom, boom, boom. Yeah.
As high as 56 to $57 billion in revenue backlog. They have, remember, they're 7% owned by NVIDIA. They've got deals with, you mentioned, throw Meta in there as well as a company that they have deals with. This is a company that is growing explosively, but they do have a fair amount of debt, or they are burning through cash, and their interest expense is a problem. But boy, the growth here, it's gargantuan, Diane. So, yeah, we'll watch how this plays out. We'll see if they disappoint or excite people, but I think it'll be a lot about what they present in terms of their growth, Diane.
Yeah, and that's the thing, like how long is the patience for investors in terms of does the growth justify the, continual spin that they've been doing? Tom, what's your take on 4 weeks?
Yeah, I think if you take a look at the partnerships, it's OpenAI, it's Meta Platforms, it's NVIDIA, right? They've got 4 major customers, but this kind of goes back to that, discussion we had about, who's going to win. And CoreWeave has these partnerships with some of the biggest spenders out there in this space. Now, you mentioned those recurring performance obligations. Jefferies, Brent Till came out with a note, and he said he expects that to get above $60 billion. That's more than double from what they had last quarter of $30 billion. So We've seen what that did to Oracle stock and some others that saw big jumps in their related performance obligations, those RPOs. We'll see if that happens here, but the stock's down over 40% from those highs that we saw in June, so it's pulled back pretty significantly. It was down 22% last week, so maybe the bar's low in this one going into it. They're still expected to, print a loss here, EPS of about 36 cents or so on $1.3 billion in revenue. So, yeah, maybe the bar's low in this one. I'm not sure.
It has been bumpy recently, but can't ignore the move it's made since they hit public markets. So let's jump into these example trades. Kev, you want to go first with your example trade?
Sure, Tom. Yeah, I am clearly in the bull camp on this one. And so what I looked at is a very short-term trade because the premiums are a little chunky, as you would think with a stock that moves like this. So I bought the November 21st 105 call, right, pretty much at the money to where we are. We're right exactly at the strike where the stock is trading. Looked at the expected move, not for the day, but for the week. I looked at the expected move, and the expected
Hey,
move
yo.
for 1 day by $12.70.
Yo, good morning, good
But
morning.
for the week, it's $15.50. So I take both of those, and sometimes it tempers my bullishness or my strike selection, and sometimes it helps me with my strike
Hey,
selection. So
where wizard
I
at?
did the 105, 120 call diagonal. I settled the November 14th 120 call.
Y'all see wizards?
The debit on that was about $7.5.
Remind him
Trading
that
less
Frost
than
is still the
$7
coldest.
now. It's come down as the market has softened.
He's
here
still the
late morning.
coldest.
So you can get this one now under $7. Diagonal that, like
Everything.
I said, it's a $15 wide call diagonal.
2K, Call of Duty.
This one is collecting data.
Just overall
Whatever
get
you
to it.
pay
You know what
is
I'm talking
the
about?
risk,
Just get into it.
But obviously you're looking for a move in line with that expected move.
The market is looking really bullish too.
Yep.
I do stocks and investments too.
Prices in about a
Crypto, all that.
$12.70 move either way, and that's been pretty dynamic today too. It was as high as 14.
You said how much
as
am I
low
up?
as 11 and a half. So that continues to be dynamic. But this takes advantage of
I ain't
that
gonna lie to you, my
dispersion
mic
that we
broke.
talked about. Let's break
So I
it
gotta
down.
hear everybody from the
November
TV.
21st monthly options expire in 11 days by basically at the money now, the 105 strike call, and sell the 120 strike call in the November 14th.
You know what? I didn't even place a trade for it today.
4 days.
I'm just kind of waiting for things to unfold.
$15 wide bullish call diagonal. You're paying roughly.
I got a leap on Meta. I got
$7.5 on you.
I just got all kind of positions everywhere.
So it's going to be about $700 in risk.
I should be able to let you know something here in a couple minutes.
About 108, 109 is going to be potential
Oh, hell,
profitability
now I'm
on this.
starting my own business.
Well within, on a percentage basis, to get above that break even. And
I'm trying to, pretty much just either teach people how to fish or just, help them get money pretty much at this point.
Anything above those levels of about 108, 109 is going to be profitability. Got some assignment risk on that short option, but you definitely need a move to the upside.
All the cryptos, we talk about all of them. I look at all of them. Like I said, I pretty much kept anybody just, get money pretty much. We look at all of them. This one, World Liberty, it was only 10 cents. Now it's at like 15 cents.
Post earnings, even though it was a pretty decent report.
Let me see if I can find it.
Really short-term positioning here, Cap. November 14th, weekly options expired.
World Liberty Financial.
And I'm going to offset some of the costs on a bearish type of vertical. Turn this into a
24%
an unbalanced or broken wing. Put butterfly to the downside.
My cousin, he was telling me, if he had 10,000, what would I put it on? His scary ass. I said, look at World Liberty. They're out here at 10 cents. You only just gotta be in these plays for like a couple minutes, bro.
But the debit you pay on this is also going to be
10 cent to 15 cent is
in risk on this
it's 5,000.
Takes your break even all the way down to 103.
That's 5,000 from 10 cent to this 15 cent right here.
So on a percentage basis, you don't need that big of a move on this one. But Kevin,
if you put 10,000 right here at 10 cent, and this thing right here is going to 16 cent, that's an extra $6,000.
And goes below that 94 level.
Just take profit.
Yeah, exactly. Long a $10, put vertical, short a $3.
You said where you gonna get 10,000?
What you're hoping for is
What you do for a living?
$3.50 and $4, it can go to $10. That's where this would peak out right
You're
around
an entrepreneur.
97 strike, Tom. Obviously, if it keeps going on the downside, you're long $10 short of $3. So your exposure, it doesn't come all the way
The
back.
10,000 come from somewhere. Somebody got 10,000. Somebody got some type of amount of money that you can invest with. You can invest as little as $1.
How far it goes down. You'd like it to stay around $97, but if it goes further, you're still profitable, Tom. This is a bearish trade.
Just add me. I got Zelle, Cash App. You know, I help you get to it. You can just give me the money. I'll do it. You know, it's whatever.
Offset some of the costs on that, because if you bought the 107, 97 put vertical just
I don't know if you're trying to troll me or what, bro, but
the unbalanced
all I'm saying is I'm watching the money move, right?
On that, so this lowers the input cost.
So if you already know how to invest and trade, you know, we can speak the language. But if you ain't never even done anything, so you starting brand new type shit.
Basis, you don't need that big of a move to the downside. And on Kevin's call diagonal, Diane, you don't need that big of a move.
Damn, I gotta give me another headset. I can't hear shit.
So there's your bull bear debate there at Coldest.
True bull bear debate there. Kevin, quick follow up on yours. You know, I know you guys always pick which one is going to take the bull bear. Sometimes it's a neutral to a bullish. What made you have more conviction on this side in your example trade, Kevin?
Well, when you read analyst notes and the amount of growth this company has, you're looking for that NVIDIA earnings release where they give you a bunch of good news. If Tom's right and this revenue backlog goes from 30 billion to 60 billion, the street's going to really like that, because that's long-term earnings growth that's starting to set up here. And remember, their partners are a who's who of people involved in AI. So, and the fact the stock's down last 3 months, it's down 29.5%. So that makes me lean for a little bit of relief, a little bit of good news. And so, yeah, I went with a more stronger bullish play, right? The more passive bullish play would just be the calendar spread, picking out a target on the upside. I wanted that flat line higher if I right direction. And in all cases, Tom's trade as well as mine, risk defined. The debit paid is your risk.
And thank boom, boom, boom on the market. You see it?
The team from Mike Bowie will be along with new sentiment data on Chipotle. That stock has had a really challenging year, underperforming the S&P 500. Here in your show network, we'll be right back.
When commissions are high.
I'm Alex.
I'm Dean. And I'm his mom.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Sandlana's live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
And thinkers in check.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop.
Alright, this is a key area right here. You got this the sloping resistance from the all-time high, red resistance.
Chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand.
Like, it could be a rejection in any way. Right here, this area. But if we get a breakout, this can fly up and touch like 280.
No politics,
no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at SchwabNetwork.com. Well, Redcast Market here on Schwab Network. I'm Diane King alongside Kevin Haynes over at the CFO. Time now for our cash tag segment. Today we want to bring in our next guest, and that is Andy Swan, co-founder of Lifefolio. All right, we're taking a look at Chipotle today. Andy, thanks so much for joining us. So Chipotle, the shares have had a very difficult year, and we continue to have this conversation about the K-shaped economy. You would think that consumers would still be going to Chipotle, but it looks like there has been some pullback in general. What does your data show us?
Yeah, it really shows Chipotle is kind of a unique outlier loser in the fast casual space and fast food space. If we look at web visits overall, Shake Shack absolutely dominated. They've embraced a lot of, Bitcoin, embraced beef tallow into their meals.
Hello, mic check.
And they've had a nice surge in both web
I had bought 10 contracts on Archer, so I'm waiting for them to unfold. Right now, I have IWM Leap, Spy Leap. I'm just kind of waiting for. I just not bought these, so I'm kind of waiting for things to unfold. So I don't have a. My PR small. I like to wait till it get big and then tell niggas what I did. But my guy, we don't all about Schwab. I listen to Schwab every single day. We do Schwab on my streaming. So yeah, you guys should check me out, bro.
Consumers kind of moving away from the company, and that's the exact sector of people that built that company up. So millennials, whatever you want to call them, the younger generation, pulling back in their spending overall.
Either way,
Chipotle
it should be like you can manage your money. You should be able to be having money in that account.
We see over and over again in our data is that people are complaining. They feel like they're just not getting as much for their money. It's not just the price has gone up, but they feel like sometimes the portions have gone down. And so, Chipotle just not the value that it once was.
Andy, looking over your visits chart, year over year change, a lot of this I get, and a lot of this is a head scratcher for me personally. Now, if consumers are worrying about prices, I get why McDonald's is up 29%, right? I get why Chipotle might be down based on that because their price is fairly high. Shake Shack being up 29%, they're not exactly giving away those. That is not a low priced option. And here's my question. The number one, Steak and Shake, are they competing with price or are they just innovating better? Why are they so bad? I get why McDonald's, we covered them a week or so ago, and your data was accurate that they're the low price point. People are going there if they're trading down. But some of the other ones are a head scratcher. What is it price or is it something other than price, Andy? I guess is what I'm asking. Because a couple of the ones on the top, those aren't the cheapest options either, as you know.
Yeah, no, they're not. Steak and Shake's a great outlier as well because they're completely, it's more of a sort of a brand turnaround. Steak and Shake was kind of left for dead a year ago, so up 73% is off of a very, very low bar. And what they've done is they've embraced some really interesting and powerful counterculture trends. With using beef tallow, they've attached themselves to the Make America Healthy Again movement. They've attached themselves to Bitcoin. You can check out using Bitcoin. So they're going after these small but powerful consumer groups that have really rallied behind them. In Chipotle's case, it's kind of just the opposite. I think that their customer, who again is the younger generation, who again is looking to cut back on their restaurant or fast food spending, feels abandoned by Chipotle because they have raised their prices so much. There's a lack of perceived innovation on the menu. There's a lack of perceived value. A lot of these other companies have done a really good job, McDonald's especially, and Starbucks to some extent, of providing some value-based options on the menu for people that can't spend spend as much as they maybe were 6, 12 months ago.
Great points earlier, because a lot of times I see online people recently questioning what you're getting from Chipotle in terms of the bang for the buck, and the inconsistency when you go from location to location. So asking the question, is it worth it? Also, just a quick point, I'm sure the elder millennials appreciate you calling them young, since at the upper end of the spectrum, they're turning 45 soon. So let me ask you this, Andy. You all often give earnings scores. When you look across Chipotle, what's the earnings score that you would give it?
Yeah, it would still be negative. I think they've still got a lot to prove. Neutral to bearish. I think Chipotle has an incredible amount to prove to its customer base, and really the biggest tell of the whole thing that, quite frankly, we missed this connection was when you see DoorDash struggling, then it's obvious that Chipotle is doing terribly, because that's probably the number one thing that the younger generations are ordering on DoorDash. So as DoorDash goes, I think Chipotle goes. They really need to add some value and bring back perceived value to their menu and their offerings in order to win customers back. Once they do, once they stop, the same store sales bleed, I think this is a great company with great upside, and it's not there yet.
Andy, one last thing before we let you go. I can't help but notice Starbucks up 14%, Chipotle down 17%. Is there a Brian Nichol effect in those two companies? One going in one direction, one going in the other? Or is Brian Nichol further ahead in fixing Starbucks than how he left Chipotle?
I think in terms of making a graceful exit, you could not have picked better timing than the way Brian Nichols left Chipotle. Starbucks still has massive problems, but I do think that they've got the right guy at the head of the ship, and so we'll see. But they're making steps in the right direction, and it's showing in Lightfolio data in terms of web visits and overall traffic. So, I think Starbucks might be where Chipotle wants to be a year from now.
All right, that's a good point. So we will see how things play out for Starbucks, especially over the next year, given that they also said they need a little bit more time. Andy, thank you so much for the look across the landscape of Chipotle fast casual in general and beyond. That's Andy Swan, co-founder of Lightfolio. So we've got the trade. We want to get the trading perspective for all things Chipotle. Well, let's bring Tom back into the conversation, because I want to get Tom's thoughts on this before you guys get to the example trade. You heard what Lightfolio brought. You saw the data. What's your take, Tom?
Well, it's a stark reversal from what we saw probably just over a year ago, because we talk CMG with Lightfolio, every quarter, and when the stock was hitting all-time highs just over a year ago, their data was pretty good. To see it reverse that quickly, but management highlighted that. They said that 25 to 35-year-old age group that was spending on Chipotle is pulled back pretty significantly, and that's their growth engine. That's why you saw those comparable sales only increase 0.3% last quarter. They said that they're not going to discount. So we saw what it did to McDonald's. McDonald's picked up market share, because they did do the value meals and the discounts. But you're not seeing that out of Chipotle at all. Stock's hitting 2.5-year lows in today's session. The market's up today and Chipotle's down. I mean, the data kind of just reflects what we've seen in the stock price. But Kevin, you take a look at it, gap down the last two earnings events pretty significantly. You'd expect some type of floor with management to kind of give us a better base, but it just hasn't happened. This has just been a falling knife. Kev, how do you want to look at this from a trading perspective, example trade?
Well, this is a very healthy company in terms of balance sheet, and they are buying back a lot of stock here, Tom. And so I think this $30 level appears to be a pretty solid level. So what I looked at is something that this is, when a stock gets down to around $30, one of my things that I think about is I can see the ground from here. So I went out to the November 28th expiration, and I'm going to work a cash secured put, and selling the 30 strike cash secured put in Chipotle just allows me to collect theta. If I sell it for where it's trading right now, about 55 cents, trading now about 65 cents, because like you mentioned, the stock is sold off a little bit, but that would give me an entry get called on this put. And as you're waiting for Chipotle, maybe you get to extend duration on it, right? Wait till expiration, sell the next one out, and just keep waiting to buy Chipotle below $30, Tom. So a cash secured put, it's basically got the same risk profile as a covered call strategy. Chipotle really does not have any real dividend, so you're just looking at collecting theta, seeing if your entry level would be below $30, where the stock seems to have firmed up here. But you remember, you can still extend duration on this. When it gets close to expiration, if the market allows you, buy that in, sell the next one, and just continue to do that, Tom. And then basically wait and be patient on Chipotle. It may be a longer term play.
Let's break this one down. Cash secured put. This is one of those strategies that, Kevin picked a line on this example and said, hey, if you put in on this one, November 28th, weekly options, so you've got about 3.5 weeks on this trade, 18 days, 2.5 weeks on this trade. You sell that 30 put, collect 55 or 65 cents, right? That takes your break even all the way down to 29.45 or 29.40, around that level there. So on this type of strategy, you've got to be comfortable buying the shares at that price if you're going to stay short that put and the stock goes below the 30 level, right? You could put a bid in for, 1,000 shares of stock at 29.45 and maybe never get filled on it. So this type of strategy allows you, if you wanted to sell 10 of these puts at 55 cents, then that would be 1,000 shares if the stock goes below 30 that you would purchase at 29.45. You stay short that put, you got assigned on these short puts. So you got to look at this strategy in twofold, where I'm either doing this to collect that 55-cent credit or 65-cent credit with the expectation it's going to remain above 30, or you've got to be comfortable owning the shares on that. You've got risk all the way down to zero on this one, about $2,940 or so to the downside. If the stock will somehow go zero, highly unlikely, but you got to take that into consideration. You've got to be comfortable owning the shares on this. And as Kevin mentioned, this is one of those strategies where as we get close to expiration over the next 18 days, you can buy that short option back, roll it up to another short put. If the market's open, it allows you to do that to keep this type of position open. But it's one of those strategies you use. I'm comfortable buying the shares if it continues to go down lower, and you get that little cushion to the downside on this cash secured put, Diane. So yeah, neutral to bullish on this one, but I think one of the keys with this type of strategy is you've got to be comfortable owning the shares if the stock does continue to move to the downside.
Guys, coming up, we've got a breakdown. We are taking a look at Rigetti. We talked about how Orly's performed. Super community copy of this one reports after the close as well. It's up more than 2,000%. We're back at 52. We'll be right back. Network. Tune in 24 hours a day, 7 days a week on SheldronFrost.com and on all your favorite streaming services. Sheldron Network, available anytime, anywhere, on any device for free.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Fast Market here on Schwab Network of Banking, all live on the floor of the big board. Before we get to the breakdown, let me take you through a check of where markets stand as we get closer to the bottom of this hour. No gains on the board. The S&P 500 is higher by more than 1%. The Dow moving higher since the top of the hour, better by 0.4%. NASDAQ 100 has a gain of 1.75%. Small caps higher by more than 1%. Rigetti is on our radar today. Rigetti Computing set to report its quarterly numbers after the close today. The street is expecting the quantum computing company to report a loss of 5 cents per share on revenues of just over $2 million. Now, the stock has been on a tear this year. It's up over 120% in 2025, and it is up a jaw-dropping more than 2,000% over the last 52 weeks. Time now for the breakdown. For that, let's welcome in George Snow, senior markets correspondent. So, George, Rigetti has been one of those high flyers, a high flyer of high flyers. So, I'm curious to know your take on how you look at the fundamentals on this one, because they say this is, this is about the new age, the new frontier. At the same time, it's still expecting to report bleeding on the balance sheet.
That's the challenge. It really comes down to the financials. And I'm just going to use the market. I mean, obviously, since September, the stock went very well, and it's been down. It was around $58 just going back about a month ago. So it's down significantly since then. But this is a story about, next generation technologies that are evolving in terms of, classical computing versus super fast computing called quantum computing. But nonetheless, there's some major players that are in this space as well, like IBM and Google. AWS is also in this space, NVIDIA, just to name some of the mega caps that are also in quantum computing. But nonetheless, if you look at the sales number, first off, for Rigetti, it's essentially expecting around $2.17 million. But here's the thing, that's actually down compared to the same quarter last year when the company earned $2.38 million. You have to be mindful of that, even respect of the fact that they're still losing money around 5 cents per share, as you mentioned. It's a little bit better than last year for the same quarter when the company lost 9 cents a share. But one of the challenges, I think, for businesses like this is, valuation, one could say it's stretched or rich considering market cap of equity around $11 billion. Sales in the last 4 quarters just, cumulative around $8 million, only expecting around $8 million this year in terms of total sales. And next year for 2026, based on consensus right now, which can change, it's around $22 million. So nonetheless, you have to consider that, even though they're making revenues around $8 million, they're still losing about $160 million. And that's going to put pressure on shares unless they change the dynamic of top-line sales for their underlying business.
Okay. I mean, it just feels like it's a difficult space to, kind of quantify the impact because everything is so, kind of future-focused when you think about Rigetti and, what they talk about, the problems that supercomputing can solve and, potentially solving things at the speed of light. When you think about the setup going into its results, a lot of the conversations we've been having for all these earnings cycles, if it has a higher bar or a lower bar, which do you think is in front of Rigetti today? Is it a higher bar that it has to climb?
Well, I think so. I mean, I'm just going to use the market. The market is changing. The market is all about narratives. And the narrative clearly earlier this year was, high beta, movement in low market cap names like Rigetti is just one example, where the market pushed the stocks higher. But since, again, going back about 30 days, we're seeing, a pullback, a pretty tremendous one in this name. It's not to say it can't go higher from here. I think the market narrative right now is sticking with larger cap names, companies that have, cash flow, revenues, and profits. But again, assuming interest rates, go down, these stocks will continue higher in the next leg to the market upside. So I'd be mindful right now that it seems like, going back the last 30 days, the market dynamic has changed a little bit. There's less appetite, it seems, for high beta names, but like I said, the narratives can change on a dime.
All right, yeah, that's a good point. That is George Sills, our senior markets correspondent, with a fundamental look at Rigetti. It's got results due after the bell. Let's get Tom and Kevin back in here for the example trading perspective on this one. So, Tom, you
just listening to the numbers that George kind of spit out there about revenue, but $8 billion or $8 million in the stocks trading at these valuations, 500 times, their sales. These are stocks that you've got to be careful with just because of the moves that we've seen. You mentioned it's up 122% this year, up 2,200% from year-ago levels when the stock was trading below $1. Quantum computing, how are they going to be able to compete with other companies that are already in this space? IBM, Google, Alphabet, they're already in this space, but there's a lot of rhetoric around these, and it's optimistic, and this is going to be the next step post-AI. Jensen Huang came out and said something about quantum computing that's not going to be in the mainstream for 10 to 15 years. That's kind of pulled back some of those comments, but that's what you got to look at, and it's got a high beta. It moves around quite a bit here. So I looked at a strategy that takes advantage of movement on this one, Kevin. I looked at buying an iron condor where I want this stock to move more than the one standard deviation that the option market's pricing in. Stock's trading about $34. $2.80 move either way is what the option market's pricing in. So looked at buying an out-of-the-money put vertical, buying the 31 put, selling the 28 strike put on the downside. And then on the call side, buy the 35 call, sell the 38 call. So need a move type of strategy, $3 wide, long iron condor. You're paying roughly about $1.50 debit. That's your risk, $150, with the expectation if it goes maybe 2 or 3 standard deviations to the either the upside or downside, you don't have to pick a direction that you can potentially profit $150 on this, Kevin. But this is one of those names that that gets hyped up. There's a lot of retail investors chasing these names because they've got quantum attached to them. But this is a type of strategy that you're just looking for a move. You just don't care if it goes up or down. You just want to move.
Right, we talk about a lot of range-bound strategies, and we talk about a lot of targets where we put our short strikes. Well, this is the opposite of all that, Tom. You want to move in either direction. You don't care which way it goes. You're just looking for one of these $1.50 spreads, these $3 virtuals that you're buying to go to $3, right? And you're buying both of them for a combined price of around $1.50. So you're just trying to get a move towards those short strikes through the long ones and towards the short strikes, and you don't care which direction. So, but how does this lose? It can only lose what you pay for, but it loses if the stock doesn't move out of that range. That's what you look for. It's the exact opposite of a lot of the things you do. You're looking for a big move. You don't care which way.
Yeah, and Kevin, that's a good point because this is an example trade that taking advantage of maybe some potential volatility. You expect volatility if you put on a trade like this because you need that more than one standard deviation move, either to the upside or the downside. But this is one of those strategies. I still have 4 days in this trade, so even if you don't get that initial move,
well, it's not rush. His our appointment, my appointment with him
where,
is
hey, I can wait a couple
Thursday.
days if I don't get the initial move, and then maybe analysts come out and say, upgrades or downgrades, something along those lines, right?
So I need some help.
Yeah, if you're short vertical spread, either call or put, you have risk on the full length of the vertical spread until you take it off. It's the opposite here. You get exposure to this market. It could be trading a dime, right, the day before expiration and then have a big move. And so it's the exact opposite. You can hold this if it goes to a low level, hoping that there's a late move. So it gives you a lot of freedom to wait all the way to expiration.
And it's one of those things where, hey, if this thing expands, say the stock goes up to $39, $40, it expands to $2 or $2.10 or something like that. Maybe you take off one half of it if the market's open, and let the other half go because it can move post earnings. And maybe the initial move isn't the way that you want it, but you've got to be maybe not aggressive, but be aware that maybe some trade management warranted on this type of strategy that I have. But it's a need to move strategy in the again.
Need to move, but some tactical trade management, as you mentioned, in terms of the example trade approach there.
So that's the current condor.
So
experienced investor, or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network, your real-time market coverage and its expert strategy. Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Yeah, a lot has been taken. Yeah, like, so I'm really trying to, I like to all my life. A lot has been taken.
I'm Nicole Petalides at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at SchwabNetwork.com.
Last year, my dad had a stroke, big shock to see this person that I've always seen as a force in our family be vulnerable. Wait, had a stroke? Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant, I programmed that 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Welcome to Next Gen Investing, and of course, happy Monday. I am Jenny Horn here to break down the market action that we're seeing right now at the noon Central Hour here in Chicagoland. We're seeing a pretty green day today, all things considered. We're up now pretty strongly across our four major averages. Actually, the smallest gainer of the group is the Dow, which is up about 0.5%, but the Nasdaq leading out in front up just shy of now 2%. Russell 2000 is up about 1.2%, and the S&P 500 up about 1.3%, with now all of our Mag 7 names firmly in the green today to kick off this trading week after seeing things, of course, unravel a bit to the downside, really, as last week's ever since Tuesday's session really picked up. We saw that risk off the non-sentiment sort of trade back and forth throughout the duration of last week. So hopefully looking to see another green week on Wall Street. But joining us now to break down some more of these individual movers is Sam Vadas, of course, host for the Schwab Network. And so Sam, walk us through really your initial thoughts as we kick off this week. I know that everyone was
little concerned about the AI narrative. Was it intact? Did that drive on the market last week? But all that to be said, we're starting this week off on a completely different footing, and I mean some positive developments we've seen also from the Trump administration, this looming government shutdown hopefully coming to a conclusion here.
Yeah, what AI valuation concerns, Jenny? We don't see it today, but certainly it seems like the concerns are still there underlying this market, but very much you see a relief rally of some sorts playing out today. We saw that across global equities. Of course, they were the first movers off the back of the developments around the potential end to this government shutdown, and so we saw a nice rally in Asia, then through to Europe, and so we're seeing some follow-through in the US session today. And really this is off the back of course, the progress that is made. Don't forget, this is not a done deal yet. This still needs to be hammered out, but no doubt at least some suggestion and conversation around the fact that we could see light at the end of the tunnel seems to be putting the wind back in the sales of markets today. This is being led, as you mentioned, by technology. This is being led by consumer discretionary. Your names, your sort of usual culprits and suspects, the Nvidias, the Teslas, the Amazons, as we say, the Max 7, and no doubt this is also coming off the back of Jensen Huang's very bullish comments. I'm going to dig into that in just a little bit with TSMC, but very much talking about how they need more chips. They're still hungry for this. The AI story remains very much intact. Not to mention, there is also a story that's interesting, but also perhaps has been a little bit overlooked, a little bit quiet, slipped through the cracks, but I think I should take note of is the fact that China has actually suspended some of those port fees on the US vessels as well. I saw a note out from a trading desk earlier saying that that could be helping things out just as far as the US-China relationship is concerned. But I mean, I suppose the big question for this week is that, you know, whether what we're seeing today is sustainable, whether it does have legs.
Okay, and to speak to that, I also think it speaks to more of the geopolitical tensions we've seen and some of the stocks that have been unfortunately caught up in the fray of that. That's our first story today, which is Taiwan Semiconductor, which saw sales slow to the slowest pace now in over, about a year and a half in the month of October, of course, which I think does signal right now the ongoing tensions we're seeing between the U.S. and a lot of these Asia-Pacific nations. Now, I know Taiwan Semi has been basically seen as like a U.S. play. I know it's not a U.S.-based company, but it's right now, I think, just been caught up in some of the uncertainty regarding like the mass demand from still China as well as the U.S. because they're somewhat of the Switzerland in terms of that relationship. But I have to imagine they have seen some degree of blowback because of it.
Yeah, absolutely. Look, this is a company that has very much been caught in the crosshairs here. But yes, you mentioned there have been a couple of stories that seem to be driving the action that we're seeing today. Maybe one more so than the other. You mentioned that 16.9% sales revenue, which was the slowest in more than 18 months. It actually takes us back to February 2024. But this is still double-digit growth, Jenny. I mean, almost 17% for sales. I suppose that's nothing really to scoff at. When you look at the breakdown here, it's still in line with estimates of the analysts out there who are penciling in about 16% in terms of revenue for the quarter. Remembering this is just capturing 1 month, but this is still $11.9 billion. So you're talking about 11% rise from September. Year to date, still up 33%. So it's still very much benefiting from all of this AI demand. Last month it did say it expects AI demand to continue, and it has actually raised its 2025 revenue guidance to the mid-30% range from around 30% initially. So it very much seems like it still continues to be on track to meet that. But also, as you mentioned, and I highlighted at the top, you have these bullish comments coming from Nvidia CEO Jensen Huang, who has actually been over in Taiwan talking to the executives over there, talking about the fact that they need more chips. Huang has been on a 2-day visit there, and this seems to be helping sort of brush off some of the AI bubble concerns that at least one of the most influential names in the tech space, you know, when Jensen Huang speaks, people pay attention, is certainly suggesting that the demand is there, we need more stuff. Now, the reports are suggesting that Huang actually asked for more production here. Just how much is unclear, but then you've also had Taiwan media also reporting the fact that Nvidia's orders could mean TSMC could boost production of the 3-nanometer wafers by up to 50%. That is just one report coming out from Taiwan. But these two stories of slower revenue growth rate and also Huang's somewhat bullish comments seem to be somewhat of a paradox here. And this is also because of the fact that what we're seeing here with TSMC is far more nuanced than on the surface. It just really speaks to the complexity of what this company is grappling with. It is very does make chips, as you say, Jenny. It's very much a US story because of those that it services, the AMDs, the Qualcomms of the world, the Apples of the world as well. But even with the orders coming in, it doesn't always have the capacity to meet that. So that's where it does perhaps provide some opportunity in the market for these other companies like the Intels and, you know, the others like Samsungs of the world to maybe step in and create that diversification in terms of some of that supply chain around the fabs as well. But, you know, this comes off the back of a week, as I mentioned, of AI valuation concerns. Wall Street bankers talking about market corrections. You know, we saw the tech wreck playing out in Asia, so this very much looks like a nice recovery for TSMC shares today.
It does, and to acknowledge, I mean, the decent move today, I think it speaks to the way that we've brushed off what was still, I mean, like a negative headline, objectively, all things considered, pretty well. And so next name today has also been one that has really risen as one of the most dominant forces in this AI conversation. Not to say it's the biggest, because it's still nowhere close, but Seagate, from a technical perspective, has become really, frankly, impressive. We're up 241.5% on the year. We're just shy of these all-time highs that were hit earlier today, and then up another 367% off a 52-week low. So, I mean, this has been a really nice performer, one that benefits from more of this hard disk drive and high bandwidth memory type of demand, which has been also what's led a lot of the strength we've seen in names like Western Digital, Micron. So they're real leaders of the price performance as far as AI is concerned, but with even further bullish news today from Loop Capital.
Yeah, these memory names have been on an absolute roll lately, Jenny, and I mean, you mentioned a couple of them in the space, your Western Digitals, and the analysts have been turning more bullish on that name as well. Even I was looking at SanDisk in a chart this morning. I mean, this stock is up over 500-600% year to date. So we have seen such a remarkable run for some of these names in the business of this storage and memory, and that is because it is so critical to this whole AI build-out of the data centers, the demand that we are seeing, and the eye-watering CapEx that is behind this trend right now. So that has led to tight supply and higher prices for these products, and that is partly what has made a lot of these analysts turn much more bullish on some of these names. So, as you said, we've heard from Loop Capital raising this firm's price target to $465 from $350. They're keeping a buy rating on the shares now. So, as far as some of the commentary accompanying that, they do see hard disk drive capacity demand moving higher into next year, with selling prices increasing for higher capacity drives as well. And they also say that the economic dynamics for Seagate and Western Digital are durable and remain in the beginning stages. So they've also upped the price target for Western Digital as well to $250 from $190. But looking across the space today, I mean, take a look at SanDisk. It's got a $220 price target from Barclays now from $39. So this has been a really interesting story, and I've actually just noticed some reports coming out of Asia in the last 24 hours that SanDisk has been jacking up its prices for the NAND by 50%. I saw another article out from Shenzhen last week. This is where the biggest electronics market, Huatianbei, is, and this is where a lot of those memory and storage products are actually sold. I'm sure you've seen viral videos of this place. It's huge. It's absolutely nuts. And they've been talking about these products and these goods, the prices actually going up as well, and that could translate into higher consumer prices too. So I've been talking to KG about this as well. This is a very cyclical trade. A lot of these names have been shorted earlier, and so we are very much seeing maybe a little bit of short covering just as the demand and that tightening supply and that demand dynamics picking up and pushing up those prices, Jenny.
Okay, yeah, and I think that's a really great way to explain also just, you know, outside of Seagate, but what we've seen as far as, like you said, a lot of these high memory, focused companies, which frankly, we need this capacity to be able to expand with other parts of this trade. So it's all very dependent on one another. We need these companies to continue to really boost their supply and their demand, which has been, I think, their hurdles mainly in the past. But now to shift gears entirely and talk Pfizer. With Pfizer also has been busy, and we do know that they have a deal right now to buy the obesity drug maker Metsera, focus more on these various obesity drugs, of course, buying its way to fight off rivals instead of right now growing its pipeline like we've seen from names like Novo Nordisk, Eli Lilly. I mean, Hims & Hers also now a pretty major competitor in the space. So Novo Nordisk initially had that bid to buy Metsera, but now Pfizer reaching a deal perhaps seen as the sweeter offer. $10 billion of sales. This is a pretty big deal, quite literally.
Yeah, absolutely. And this was a bidding war that was sort of taking place between Pfizer and also Novo Nordisk. So they seem to have come out on top here, and this is to buy Metsera, as you say, the weight loss drug maker. And basically this is going to help Pfizer step into this space. It's a very high growth type of space, as we know. Unfortunately, a lot of Americans are suffering from their health conditions as a result of the obesity, and so this has been seen as a company that has really lacked a commercial solution in the weight loss drug space, and so no doubt this makes sense on that front. But this is really interesting because while Pfizer shares are down slightly, which we typically see off the back of announcements like these, take a look at Metsera. I mean, it's down 15%. That is not something we always normally see. So this comes off the back of, I've been reading some of the commentaries to why exactly we're seeing the shares in that company tanking, and they have been talking about some of the reports about a sweetened deal. Antitrust risks have been cited with Novo's bid, which has been described as actually superior in this deal. Novo pulled out of the race on Saturday, but Pfizer got the upper hand because they continue to match what Novo was putting on the table here, and that is where you come in and say that, obviously Pfizer perhaps sort of financially muscled its way in here. Metsera accepting the offer from Pfizer inevitably. So terms of the deal will be that Pfizer pays $65.60 a share up front, then $20.65 extra on the basis that it sees success with the drugs. It values Metsera, as you said, $10 billion. But the reason behind the sell-off as well is because this is not all cash up front, and the value could actually change if they don't see that success, if they don't hit those milestones. So maybe that's the explanation for some of the softness we are seeing in Metsera today. It is not something that we have seen where it has a treatment that has hit the market yet commercially. It's still in clinical stage trials. But I was listening to Albert Bourla this morning. He was here on the floor, and he said that this makes sense. He's very excited about this, and this is something that adds value to the portfolio. They've been looking far and wide, Jenny, apparently across Europe and China, etc. But he says this one makes sense.
Okay, and I do think that it's not bad a decision if you have the cash in hand to be basically buy into this space, which has been one of the most lucrative aspects of all of healthcare and pharma right now, which is being really, I think, scrutinized, especially under the Trump administration, being more critical of some of these drug makers. So I think that kudos to Pfizer for getting into the game any way that they can, because I know they've had some delays in the past with their various clinical trials and such. But last name today, Coinbase. And so Coinbase also with its own specific Coinbase news today. Coinbase actually one of our really nice performers of the session here is we're up about 3.5%. We've given back a little bit of our earlier strength here, but launching a platform now for these digital token offerings, which I know that they've been perhaps criticized in the past of they're not always going to be the one-stop shop for all crypto. I mean, it's just going to not be that same environment anymore. And I know that with the likes of these other companies and legislation being passed to make this a more accessible world, there's been fears then of what that looks like for Coinbase, but they've definitely been busy trying to retain that strong, loyal customer.
They have indeed, and you hit the nail on the head there with the one-stop shop. I think that's very much what they're trying to do here as far as some of their diversification efforts. Just for context, I mean, this is the biggest crypto exchange by trading volume here, and basically what they've done now, and I'll just read a couple of lines from the Wall Street Journal, who originally broke this story, that they're going to be launching a new platform for the token sales to allow investors to basically buy digital tokens before they're listed on that exchange. Now, they're going to be hosting one token sale per month. They will use an algorithm now to determine where they go as far as which investors they go to, and you can actually put in a buy request during a 1-week window. Tokens will be paid with USDC. That's the stable coin that is obviously pegged to the US dollar. So for context, and I think you sort of touched on this as well, Jenny, this has been something that we did see sort of popular back in 2017, 2018, but some of the thinking here was that this wasn't a mature enough market. Now it is, and this has been supported by a lot of the tailwinds. It's a much more regulated and much more structured space now, as you mentioned, with some of the adoption we've seen from institutional investors, but also a lot sort of more of a friendly sort of political environment as well. So we have very much seen a lot sort of behind the crypto space that has got us to this point today. And this is the first time that investors can actually take part in token sales since 2018, before we actually saw the prices falling and those regulators stepping in and cracking down on this. Now, just a quick snippet from their own issuers coming to market today actually struggle to get their tokens in the hand of real users while building deep exchange liquidity. So this seems to be what they're trying to target here, and they've actually said that the first token sale will be from November 17th to the 22nd. So as I said, very much trying to be a one-stop shop, everything sort of exchange here, and trying to build out its sort of diversification efforts. And, you know, we have seen analysts turning a little bit more bullish on names like this that have been entering these kinds of spaces with these platform offerings.
Yeah, and it definitely helps that they have had, I mean, a lot of these like fundamental business shifts to back this. So up another 3.5% today, and hey, we're seeing actually Bitcoin trade in tandem for once with Coinbase. I know those two have been closely linked, but lately it feels like they're all over the place. So Bitcoin actually firmly higher today, at least the futures products up just shy of 2%. But so appreciate it for helping us break down the top of our show today and some of the biggest movers we're watching in today's market. That's Sam Vadas, of course, host for the Schwab Network. Now coming up next, it's time for Chartmaster. We will dive into the charts and trades in both CoreWeave as well as Rigetti. Both pretty frothy names, both pretty volatile names, now ahead of their earnings reports, which are today after the closing bell.
Connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl?
Schwab, a modern approach to wealth management.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
You know what? You ain't watching the money move on the market?
Welcome back to Next Gen Investing. It's time to discuss our charts with, of course, our chart master, Rick Duquesne. So we're talking two names with earnings still ahead of those being
and you ain't at work.
Computers, as we are seeing. I mean, first of all, both very volatile names. I think they're both chosen today for a very good reason. That's their big movers. And some of those big moves we haven't seen now in quite some time. Specifically, though, we're talking about CoreWeave. CoreWeave was a public offering that was a relatively new company to us all, you know, in the public world
I
here.
heard what you
in
said.
a sense, not fallen out of favor, but it hasn't been a steady shot to the upside.
Well,
so let's see what you're seeing from this company now ahead of earnings.
Yes, a bit of a decline here that we've seen heading into this earnings event here. We had our highs, 187, all the way back here in June, or earlier in this year here. Then we connected these subsequent highs here and here. So that's about where we topped out most recently, near 140 during our last climb that failed to reach this level near 147. These old highs here that matched up with our subsequent highs that I just mentioned here. Now we find ourselves near the 105 level. If we were to backtrack once again, low point here, low point here, high point, low point, and then low point once again around here. So this general area
These
near
girls
105
ain't, they know
stands
up top.
out as a
I'm running a
stopping
business.
point for price. It looked like perhaps we were going to cross above our downward sloping trend line here as well today, but that has not really came to fruition here. We are right back on the money of that line once again here, as well as our supportive 105 area. If we were to move lower, a series of further lows down near the 85 level stand out as the next possible foothold. If we were to include some of our other studies here, we can see that for one thing, we have our two shorter-term moving averages, our yellow 21-day and orange 63-day exponential moving averages, coming together right around 123, so that provides a pretty convenient confluence point for potential upside resistance to watch out for. We also have our purple 252-day exponential moving average to the downside. Our long-term most noteworthy moving average comes in around 93.70, so that could be another downside area to watch. RSI taking a hit below the 50 midline, below our green trend line. Pretty common for momentum to trail off as we head into earnings, however. Finally, when we look at our standard deviation channel and volume profile studies, we can see here that the heavy volume area to the downside comes in between about 95 to 105, about a 10-point range or so, where we see the heavy trading activity. So this would be where the bulls once again would hope to find a foothold. Otherwise, it could open the door even lower here to our next heavy volume area near 68. To the upside, once again, the volume coincides with our confluence of resistance here with our moving averages. That comes in right around 120 or so. So another upside area to keep in mind.
Okay, so now when we do look at CoreWeave, it's up 1.5% today. I know that earnings are oftentimes the reset for technical levels, but as we do think through, trading this name for example purposes here, how do you think about a name that has historically not really given us much indication of how it performs in the back of earnings? I know that past price, not necessarily indicative of future performance, but we don't really have the same historical context for CoreWeave.
Yeah, that's a good point here. And when we do have a situation like this, one thing you can do is think about the expected move for the options market is projecting here. In this case, looking at the November 21st series, see if it lines up with any support or resistance areas. So in this case, we have our 85 area that stands out here. And if we look at the expected move for November 21st, that gives us a range, that's a little bit to the downside as well there, near 90, around 88 or so, around that general point once again to the lower end. So if you were to make a trade, -1 November 21st, 90, 85, put vertical at 125 credit, this would be a neutral to bullish type of play here that would be roughly in line with that expected move area here. So this would be 11 days out, so it would take advantage of earnings without give yourself a little bit more time for things to solidify if it doesn't immediately go the way you were hoping here. 125 credit versus 375 max loss, about a 1 to 3 risk reward here. Break even comes down 88.75, as I said, about 16% to the downside or so, gives us this cushion that we want to stay above.
Okay, so now to shift gears here and talk another name that has been on a bit more of a run as of late, but also similar in the sense of being volatile, being fairly, I think, skewed as far as opinions and conviction on say going into its earnings, that being right now Rigetti Computing, which is obviously in the world of quantum stocks have been on a run as of late. But however, I think it's important to note that while we look at this name, there's also again a lot of historical context. I know this name has been public for quite some time, but we don't really have the same price levels as we've seen recently to go off of historically.
We've still got plenty to work with, though, to think about some shorter-term boundaries, though. This is one of those charts where we have very distinct phases here. If you were to look back all the way over here, we had a notable high close. Our light green line comes in around $20. Once we did start to breach that area, the price was explosive to the upside here. You can see that we eventually did top out just above 58. And we've given back quite a bit of those gains since that time.
It's just all about mindset,
here
what you
was
want to
kind of what is sometimes called a bull trap type of pattern, where
this
we
is
have
just how the
very
girl want to
sharp
live her
rally
life.
to
She
the
don't want to be
upside.
in a
We have our high
relationship.
points,
She
we
wanna
have
have
a bit of a decline, and then the subsequent rally does not make it up to that same general area. And I'm not saying this is exactly that type of situation. Just this is the general type of price activity that you might see when this situation is starting to take place. for now, we're hanging out near these old lows and these old highs as well, near about the 34 level. If we were to move lower, another series of lows comes in around 28.45. When we look at some of our other studies here, we can see that we have our moving averages coming back into play once again here. Not really the same type of confluence. Our 21 days at 38, our 63 days about 32, so that gives us some areas to watch to the upside and the downside. Momentum also declining. We're below the 50 midline. We are still in line with our downward sloping trend line here in red. Notice as well we saw some bearish divergence here during this run-up. RSI was not following suit with price. That kept making higher closing prices. RSI was declining. So a bit of a mismatch there that did eventually translate into a downside move. When we look at our other studies, we can see our linear regression line, our line of best fit based on our closing prices. Our fair value line comes in just below 30, 29.50, lining up pretty well with that 28.50 level, 28.45 or so. And finally, to the upside a little bit further, we have our +1 channel lining up with our volume node here near about 40. So that could be another area to watch.
Okay, this name actually bucking the overall trend that we're seeing in the market today, which it's down about 0.5%. I know that it's been on a pretty meteoric run. We pulled back pretty substantially from those levels. So given the nature of the volatility of this trade and just, the outsized movements we've seen from the same without even earnings catalysts needed. I mean, it can move hugely without even a fundamental update from the company itself. How do you think they're now trading this name, given, of course, its ties to quantum and all of the very lofty expectations for the quantum space from the sell side?
Right, and we did a short put vertical with our last example. We're going to kind of take the other side, do a long put vertical in this case. So our trade in question, our example trade that is, +1 December 19th, 30.25 put vertical at a 170 debit. Paying $170 debit, max profit potentially of 330, almost like 1 to 2 in terms of risk versus reward here. So as I said, a bearish play, going a little bit further out, 39 days to expiration here, break even 28.30, about 16% or so to the downside here. So if we do look at our expected move for that same time frame, though, that's well within that range where the market would be looking for about a 35.5% move, plus or minus here. So if you did have a more bearish outlook in this game, given some of the extreme volatility we've seen in this whole space recently, this could be one trade to consider as we approach this next play.
Okay, and this one, again, moving to the downside today, but seeing some duration on the back of this example trade, so we do have a bit more time, not really an earnings pure play, so you're looking for a bit of breathing room outside of just that earnings event. But we so appreciate it for all of the technical and trade breakdown. Rick Ducat, our chart master today, also our honorary trade master, of course, so appreciate it today. We'll leave it there, though, for Chart Master today. Coming up next, it's time to dive into a lot of these pharma companies, as we've seen now an update over the weekend from the Trump administration and health insurers moving broadly lower today.
For instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets, follow me on X at @NPetalides and connect with me, Nicole Petalides, on LinkedIn, Facebook, and Instagram.
Trading at Schwab is powered by Ameritrade, unlocking the power of thinkorswim, the award-winning trading platforms. Bring your trades into focus on thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization and track.
I thought you was at work. I thought they was going to get you a Monday.
Trade brilliantly with Schwab.
Live from Chicago, this is Trading 360. I'm Marley Hayden. We track macro forces, market trends, and company news that shape investment decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
That's what I noticed about myself. I may not be where I need to be.
I have a question for you.
worked hard, and after he passed away, the torch has been passed to me, and my advisor Jennifer, she was with me with the journey, helping with the estate distribution. The two grandchildren planning for their college educations. Someday it'll be their turn.
No. Look. The difference is,
Your real-time market coverage meets
I met
expert
this girl, like I said,
strategy.
she's a woman, right?
To the closing
So
bell.
she just
We
won.
got you covered.
She didn't necessarily want a relationship, or she just wanted
Get
friends.
inside the minds of
I'm pushing a
pro-traders.
relationship,
The
but
point is
I
what
was
they're
at the
getting.
point in my life where I'm
High
trying
rate
to
of change in sales based on the guidance,
So,
not the same rate of change on
fast
EPS.
forward a little
The
bit,
biggest headlines.
she started changing her mind to where, okay, now we are in a relationship.
Minute by minute.
So,
Females really lonely though.
Break it
When
all
they
down.
say they're lonely, it's like, you know,
Accuracy and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand. Schwab Network, streaming 24/7, any screen, anywhere,
go
free.
back and forth with that.
SchwabNetwork.com.
You know, but none of that stuff even matters. The point is,
Welcome
okay,
back
she
to
can have
Next Gen
one,
Investing.
two,
I'm Jenny Moore, and I'm joined by Marley Caden, host for the Schwab Network, to discuss a lot of the movement we're seeing still on the downside in these health insurers. And I keep broadly saying, like, healthcare. It's not healthcare. It's more of these health insurer-focused names that are seeing some weakness today because of everything we've seen from the Trump administration. So I know that there's still a bit of a crosshairs right now to be had between right now House Republicans, House Democrats. It still seems shutdown looming. But how is this playing out now to names like Cigna? I mean, UNH, CVS. I mean, in real time, still seeing some weakness today.
Well, certainly seeing weakness across the board. And you said it's not healthcare, it's the insurance companies that are really in focus today, or I guess in target almost, following some commentary from the president this weekend on social. Let's talk about what this is, because there is a government shutdown tie-in here as well. Those health insurers who have plans under the Affordable Care Act. So this is not all health insurance companies. These are just the insurers who offer plans through the Affordable Care Act, or informally called Obamacare. President Trump came out over the weekend and said that federal funds subsidizing those plans, in his opinion, should be directed to the American people who are buying that coverage. So like Jenny, you just mentioned, the subsidies are at the heart of this shutdown. It's sideline workers, it's snarling air traffic. We've heard all about these horrible lines at the airports. This is really what's at the heart of it. These subsidies are due to expire at the end of the year. The Democrats want protections for them. The Republicans say they won't give them. They won't even agree to discuss them until the government shutdown is over. So that's really what's at the heart of all of this. They were introduced during the pandemic to help lower-income Americans pay for their private health insurance. But these plans, they're subsidized by the government based on income. They include a risk adjustment pool that endorses these insurance companies, gives them extra money by covering a disproportionate share of sick members using these subsidies. So they're basically getting money paid back from these subsidized people. In a series of posts on Truth Social, Trump went in and said hundreds of billions of dollars are currently directed to what he called the big bad money-sucking insurance companies under the ACA, and said that they should be sent directly to the public. He went on to say, quote, "I'm recommending Senate Republicans that hundreds of billions of dollars currently being sent should be sent directly to people so that they can purchase their own much better health care and have money left over." Most of that was in capital letters. He then went on in capital letters to say the money must now go directly to the people, taking from the fat cat insurance companies, taking them out of the corrupt system of health care. People can buy their own much better policy for much less money, saving for themselves an absolute fortune. And then he followed it up with pay the people, not the insurance companies. So the argument here is that the reallocation, if this ever came to pass, would enable individual people to purchase superior healthcare services and retain any additional savings. That's the argument that's being made here. Now, these subsidies have enabled enrollment to double since they started. There's now 24 million Americans since they were put in place since 2021. But the biggest insurers in the ACA marketplace, this is Elevance Health, United Health, CVS, because they have Aetna, Molina Healthcare, Centene, Oscar. These are the biggest drops that we're seeing today, these primary insurers in the ACA. It's not the entire insurance umbrella, although there's a sympathy move sort of across the board. Oscar Health, the worst right now. They're down about 15.5%. Elevance down close to 4%. Centene down about 7.5%. Molina Healthcare down about 6.25% right now. United Health and CVS both down less than 2% each. But it's an interesting time for that post as well, because this being the sticking point with the government shutdown also was already creating a drag on this sector of the healthcare sector, of this insurance section, because there were concerns about these subsidies. They are the primary focus and the linchpin sort of in this getting through this impasse. So now that we're seeing, presidential support for the complete disruption of these subsidies, and not just their ending at the end of the year, we're in fact going to take that money and give it directly to the people buying the plans, is a far pivot from what's happening right now and would have a big impact on any of these insurance plans.
I don't see I feel a split feeling about this, because I can understand that it is obviously not good if you're Molina, you're CVS, you're, like in UNH, Cigna, etc., all the companies you just laid out. But then from a consumer standpoint, I'm like, well, wait a second, this is actually objectively a good thing for us to be more directly in control of like our benefits, what we pay to these various multi-billion dollar companies. And like I think it's a really interesting shift we've seen with like CVS's Aetna and others that are reassessing now their ACA participation. If that funding uncertainty persists, we could see a real upheaval in the way that we think through like healthcare and these formatives. But I think it's probably a good thing to be challenged from a consumer standpoint. From a investor and trading standpoint, I can understand why it's a bit of a different feeling.
Certainly, I'm looking at Cigna now. They're down to 2 3/4. They're not one of the top ones in the ACA marketplace, but they are in the marketplace. And it is interesting. It's an interesting perspective. Whether or not this is even a possibility, I don't know. I'm not in the political sphere. If this could actually be that this money could go directly to the people to choose what they want to do with it and to put it into their healthcare in that way, I'm not sure if that's actually a possibility. But just the uncertainty around it is enough to potentially damage these stocks, and also, as you said, make them question their place in the ACA marketplace, which will absolutely impact their growth potential if they make a decision to remove themselves with any uncertainty still in the sphere when that happens.
Yeah, I'm still a big supporter of, like, I just want this, like the pharma and healthcare stocks aside, I just want this healthcare shutdown to be, or government shutdown, excuse me, to be over. I think that's the biggest win for the American people. But again, it's the air of uncertainty that I feel like we can't shake, that is still this looming cloud a bit overall the market here. So really great breakdown on what we're seeing right now still weighing on these health insurers, and so we'll have to watch that situation as, of course, it unfolds. But I appreciate it, Marley Caden, for giving us all that insight on this Monday. Now, coming up next, we will dive into the state of the auto industry and the impact of the expiration of those EV tax credits and what that now looks like going forward.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly.
I can invest and trade on my own. Yes, and I let them manage some investments for me, too.
Let's move on, shall we?
No can do. Look it up here.
Where are you going?
Schwab. Schwab, a modern approach to wealth management.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are. Morning Movers brings traders the biggest headlines to start the day, from vol